लकी है. He's nice or what?
मतलब इससे तो बेटर ही होगा, इससे बेटर है.
This gang Gautam नहीं है. I'm obviously Gautam नहीं है.
वो नहीं है. मैं तो वो घर पे खड़े रहना, उनका कॉल से लेकर सब करना, 1.5 घंटे का टाइम, हमारे पास 10:30 12 का टाइम है इसका. एंड वी आर लेट. ऐसे ऐसे करोगे, समझ जाइए, धीरे बोलो, ठीक है. छोड़िए. लाइव रिकॉर्डिंग हो रही है, पहले बताती हूँ. यूट्यूब का लिंक कौन सी मम्मी को भेज देती.
जहाँ YouTube पे हो रहा है.
यूट्यूब पे होगा.
मैं उसका देता हूँ.
हाँ तो वही तो कह रही हूँ. सबको आएंगे तो बोल देंगे, अभी गेस्ट आएंगे. अनाउंस करें, रिक्वेस्ट एवरीवन टू प्लीज बी साइलेंट. बोल बोल बोल.
I request everyone to please be silent.
पास इनका ETA लिखा था 10:25. मुझे शास्त्री हमेशा लेट आता है.
मुझे शास्त्री
शास्त्री हमेशा लेट आता है.
और
इसका थैंक यू नोट ही नहीं है. सब कुछ कट हुआ है.
थैंक यू सर फॉर इंस्पायरिंग वर्ड्स.
लंबी लाइन है.
लंबी लाइन है, देखो.
एक बार बाकी भी चेक कर लेते हैं. इसके बाद का तो नहीं है ना कुछ.
ठीक है. एक सेकंड. गो.
Good morning to one and all present here. On behalf of Lal Bahadur Shastri Institute of Management, Delhi, I, Arushi Sahani,
And I, Hriday Tuteja,
from PGDM first year, take great pleasure in welcoming you all to this year's National Finance Conference. Founded on the values of integrity, humility, and service inspired by late Sri Lal Bahadur Shastri ji, LBSIM has established itself as a premier institution committed to academic excellence and ethical leadership.
its legacy of nurturing industry-ready professionals continues to guide our endeavors and shape the learning environment we proudly uphold. It is therefore our privilege to host this esteemed gathering of industry pioneers, academic scholars, and visionary professionals united in their commitment to share insights and explore the dynamic, evolving landscape of modern finance.
The financial ecosystem around us is entering a new era, an era shaped by disruptive technologies, shifting consumer expectations, and an unprecedented pace of digital innovation. These forces are not merely influencing financial systems, they are fundamentally redefining how institutions operate, how services are delivered, and how value is created in an increasingly digital world.
Today, finance extends well beyond its traditional boundaries. It has evolved into a smart, technology driven ecosystem powered by automation, advanced analytics, real time data, and seamless digital interfaces. From AI led underwriting and blockchain verification to digital payments, insurtech, regtech, and embedded finance, fintech innovations are rapidly redefining the global financial landscape.
For professionals, this transformation calls for more than technical proficiency. It demands agility, data driven thinking, and a continuous innovation mindset. As the financial world shifts, leaders must craft strategies that balance technological advancement with responsible, inclusive, and sustainable financial growth.
This year's conference theme, Reinventing Finance Through FinTech Innovations, captures this dynamic transition. Today, we will explore how FinTech is strengthening financial systems, enhancing transparency, expanding access, and opening new avenues for value creation.
This conference brings together diverse viewpoints to understand the future of finance. It allows us to engage with new ideas, learn from practical use cases, and explore how technology can strengthen financial systems. It also reflects LBSIM's focus on quality education, strong values, and continuous growth. Now, I would like to request everyone to please rise for the LBSIM anthem.
Thank you. Please be seated. At LBSIM, we proudly carry forward the legacy of late Shri Lal Bahadur Shastri Ji, the second Prime Minister of India. His values of integrity, humility, and service to the nation continue to inspire us in our academic and professional endeavors.
It is an honor to present a short film on the life and leadership of late Shri Lal Bahadur Shastri Ji, a leader celebrated for his modesty, ethical conduct, and steadfast service to the country. His legacy continues to inform our vision and purpose and shape our institution as we navigate the challenges of the modern world.
सत्ताईस मई 1964 पंडित जवाहरलाल नेहरू का निधन हो गया। देश गहरे विषाद में डूब गया। सभी के मन में एक ही सवाल था, कौन बनेंगे नए प्रधानमंत्री, कौन करेंगे इस महान सभ्यता का नेतृत्व।
आफ्टर नेहरू नेहरू के बाद कौन होगा, तो ये उनको इस बात का एहसास था। जब मुझसे पूछा गया कि इस कमी को दूर कैसे करेंगे, तो उन्होंने कहा कि पंडित जी ने अपने व्यक्तित्व की वजह से, टावरिंग पर्सनैलिटी की वजह से, उन्होंने इस पद को शक्ति प्रदान की और मैं प्रयास करूंगा इस पद से शक्ति प्राप्त करने की, जिससे कि मैं देश की सेवा कर सकूं।
2 अक्टूबर 1904 के दिन काशी के पास मुगल सराय में जन्मे लाल बहादुर का पूरा व्यक्तित्व ही गांधीवाद का जीता जागता स्वरूप था।
उनकी सादगी, पहली बात तो धोती पहनते थे, ये आम आदमी को उससे बड़ा भरोसा हो जाता था कि हमारे जैसे है।
पिता की छत्र छाया बचपन में ही छिन गई थी। विधवा मां के साथ ननिहाल चले गए, वहीं पर परवरिश हुई। 1921 में जब स्वतंत्रता आंदोलन में कूद पड़े तो निष्ठा और दृढ़ता के प्रमाण मिलते चले गए। 17 वर्ष की आयु से स्वाधीनता तक लगभग 9 साल जेल में काटे। रहीमन हीरा कब कहे लाख टका मेरो मोल। पार्टी कार्य में उनकी निष्ठा से प्रभावित होकर नेहरू ने लाल बहादुर शास्त्री को रेल मंत्री नियुक्त किया, परंतु 1953 में घटी एक रेल दुर्घटना की नैतिक जिम्मेदारी लेते हुए शास्त्री जी ने मंत्रालय से इस्तीफा दे दिया।
उन्होंने वो इस्तीफा देकर राजनीति में नए मूल्यों की स्थापना की।
नेहरू जी के मंत्रिमंडल में कई विशिष्ट पदों पर अपनी छाप छोड़ते हुए वे गृह मंत्री नियुक्त हुए। 9 जून 1964 पंडित नेहरू के निधन के बाद स्वयं पंडित नेहरू के चहेते लाल बहादुर शास्त्री ने भारत के दूसरे प्रधानमंत्री का पदभार संभाला। कुल 4 शब्दों में उस मृदुभाषी व्यक्ति ने देश को एक नारा दिया, जय जवान जय किसान।
उन्होंने उस समय इस बात का एहसास कर लिया था, देश के अंदर हमें अपने जो भंडार है अनाज के उन्हें पूरा भर देना है और एक जो भारत के गौरव और गरिमा को देश विश्व में खड़ा कर देना है, वो अगर संभव है तो जवानों और किसानों की जय जयकार करने से ही है।
लाल बहादुर शास्त्री, Prime Minister of India, speaking on Independence Day in 1965.
हम हथियारों का जवाब हथियारों से दें।
5 सितंबर 1965 पाकिस्तान ने भारत के खिलाफ खुली जंग का ऐलान कर दिया। जवाब में भारतीय सेना पंजाब से सीमा पार कर गई। जब तक संयुक्त राष्ट्र की पहल पर युद्ध विराम हुआ, तब तक भारत की सेनाएं पाकिस्तानी सेना पर हावी हो चुकी थी।
वो किसी के दबाव में आने वाले व्यक्ति नहीं थे। जब ऐसी घटना होती है तो बहुत ज्यादा अंतर्राष्ट्रीय दबाव होते हैं। अगर आप दब गए तो झुक जाएंगे, वो नहीं दबे। लेकिन फिर शायद दोनों देशों की भलाई सोचकर वो युद्ध विराम पर राजी हो गए।
10 जनवरी 1966 ताशकंद। जिन आदर्शों के नैतिक बल का मजा वो पाकिस्तान को चखा चुके थे, आज उन्हीं आदर्शों की उदारता से उन्होंने समझौते के कागजात पर दस्तखत कर दिए। लेकिन अभी समझौते के दस्तावेज पर स्याही सूखी भी न थी कि उसी रात शास्त्री जी को दिल का दौरा पड़ा और उनकी मृत्यु हो गई। गांधी जी ने कहा था कि शत्रु का दिल जीतना ही वास्तविक जीत है। सुदूर ताशकंद में जब स्वर्गीय लाल बहादुर शास्त्री को कोसिजिन के साथ साथ खुद जनरल अयूब खान ने कंधा दिया, तो लगा जैसे शास्त्री जी बापू के फलसफे को चरितार्थ कर दुनिया से रुखसत हो गए थे। लाल बहादुर शास्त्री केवल 18 महीनों तक भारत के प्रधानमंत्री रहे, लेकिन अपने प्रधानमंत्रित्व के छोटे से कार्यकाल में शास्त्री जी ने भारत के हर नागरिक के कानों में आत्मसम्मान और आत्मबल का मंत्र फूंक दिया था। अपने व्यक्तित्व से उन्होंने निष्काम कर्म और पुरुषार्थ की वो मिसाल कायम की कि उनकी गिनती भारतीय इतिहास के सर्वोच्च महापुरुषों में होती है।
As we reflect on the life and ideals of Shri Lal Bahadur Shastri Ji, we are reminded that true leadership rests on integrity, courage, and purposeful action. In this spirit, today's finance conference explores the transformative shift in the financial world shaped by emerging technologies, digital innovation, and a growing emphasis on resilience and inclusivity.
The discussions ahead will help us understand how fintech is reshaping financial services, empowering new forms of value creation, and opening pathways for a more accessible and future ready financial ecosystem. Following the proud tradition of LBSIM, we would now like to invite our esteemed guests to join us in lighting the ceremonial lamp and paying our homage to the late Sri Lal Bahadur Shastri Ji.
I request Ms. Vibha Jain, Mr. Ajay Chaudhary, Mr. Mudit Shastri, Professor Praveen Gupta, Colonel Ajay Sood, Professor Rekha Gupta, Dr. Swaranjit Arora, and Ms. Ananta Srivastav to please come to the stage. May I now request all the dignitaries to take their seats on the stage.
We would now request Professor Rekha Gupta to kindly welcome our chief guest, Ms. Vibha Jain, with the planter as a token of our gratitude. Thank you, ma'am.
We now request Dr. Pankaj Vashne to welcome the keynote speaker, Mr. Ajay Chaudhary, with the planter as a token of our gratitude.
Thank you, sir. We now request Dr. Himani Chahal to welcome the keynote speaker, Mr. Mudit Shastri, with a planter as a token of our gratitude.
Proceeding further, We are honored to invite Professor Praveen Gupta, Director, LBSIM, to deliver the welcome address and formally declare the National Finance Conference 2025 open.
Good morning, everyone. Chief guest for today's conference, Ms. Vibha Jain, Head, Digital Lending Solutions Group, Newgen Software Technologies Limited. Guest of honor, Shri Ajay Chaudhary, CEO, NIIF Infrastructure Finance Limited. Keynote speaker and member of advisory body LBSIM, Shri Mudit Shastri, Senior General Manager, Head Government Business, Havels India Limited. My colleagues, Dr. Rekha Gupta, Dr. Swaranjit Arora, Registrar and Chief Administrative Officer, Colonel Ajay Sood, dear faculty colleagues, students, ladies and gentlemen. I extend a warm welcome to all present here, especially the guests on dais. At the outset, I thank them for taking time out of their schedule and for sparing their valuable time and valuable weekend morning with us, especially with the students of LBSIM. I thank all the guests for being here with us today. Let me share with the guests today, we organize 3 to 4 domain-specific conferences every year. So to begin with, we hold OB and HR that we have done in the month of August. And the idea is to bring industry and academia closer together and to showcase our capabilities to the industry member and more importantly, offer the students an opportunity to listen to the industry experts about the new developments and what are the new possibilities in terms of career horizons for them. I'm very happy to share the title of today's conference, Reinventing Finance Through FinTech Innovations. With dignitaries and experts in the domain present here, I would not like to dare to step into their domain. I will only present my perspective in terms of what FinTech can do to finance and to economy. FinTech offers the integration of technology with financial services to improve and automate the delivery and use of financial products for a broader set of customers, citizens, and the public. From mobile wallets to digital payments to peer-to-peer lending and AI-driven investment platforms, FinTech spans a broad spectrum of innovations. For India with the country, India with population of 1.4 billion, diverse economic conditions and significant population which is either unbanked or underbanked. FinTech offers a unique opportunity because it can break down the traditional barriers. FinTech can reduce costs and also increase the accessibility of financial services to millions. As nation progresses in terms of ambitious vision of our Prime Minister, the Viksit Bharat or Developed India till 1947, FinTech is emerging a key enabler driving financial inclusion, innovation, and economic empowerment. FinTech can create new Bharat, the Viksit Bharat, driving massive financial inclusion, empowering underserved populations, farmers, MSMEs, and boosting the economic growth through accessible digital payments, instant credit, and vernacular interfaces and data-driven lending. As I was thinking about this conference, let me acknowledge how AI helps us. The moment I was searching for some data, AI has picked up so many new threads for me. And let me also share, when I was discussing for 15 minutes with Mr. Ajay Chaudhary, I think new thought processes have come to me. and let me share with you. For decades, EMIs were the backbone of consumption economy. But in 2025, young customers want zero rigidity, instant access, and personalized repayment plans. Income, uh, income-linked repayment plans, subscription-based ownership, usage-based microfinancing, and revenue-based financing, tokenized fractional ownership. So these are some of the changes. In last 10 years, we witnessed so many changes in terms of financing. But in last 3 years, I think things are changing even faster pace. AI credit scoring will be still relevant, but more than static documentation, what we require is the dynamic lifestyle analytics. So lending will be based on your lifestyle data that is picked up by the companies. So higher royalty and lower NPAs, that is the motto for today. And future belongs to those lenders who treat customers as partners, not as payers. So with these trends coming up, I think there is a whole lot of opportunities for everyone, both the industry and for citizens of India, and also for students for new opportunities in terms of employment, or maybe you can become entrepreneurs and you can generate some new ideas. So with these words, I set the ball rolling for today's conference, and let me say once again, which I iterate in every conference, it's not that you are made to sit here full day and listen to experts and you feel bored. Thing is that each single idea has a reflection on your life. What idea will trigger what outcome to you, we don't know. So provided you are, say, focusing and listening to them carefully, engaging, asking questions, I think it will bring a change in your life. Thank you so much.
We sincerely thank you, sir, for your profound and encouraging words. Your insightful remarks have truly set an uplifting and thought-provoking tone for this distinguished gathering.
Now, I would like to invite Dr. Swaranjit Arora, conference convener, to apprise us of the theme of this year's conference.
A very warm welcome to all esteemed dignitaries, Ms. Vibha Jain, our chief guest of the day, Mr. Ajay Chaudhary, guest of honor, Mr. Mudit Shastri, keynote speaker, our respected director, Professor Praveen Gupta, and our Dean Academics, Dr. Rekha Gupta. Distinguished speakers, faculty members, industry guests, and dear students. It's my privilege to present the conference overview for the National Finance Conference 2025 on the theme Reinventing Finance Through FinTech Innovations. The theme has been carefully chosen to reflect the rapid technological disruptions reshaping the global and Indian financial landscape. With engaging emerging technologies such as AI, blockchain, digital lending, data analytics, algorithmic trading, the financial ecosystem is witnessing transformational shifts, creating new opportunities as well as new challenges for institutions, policymakers, and professionals. This year's conference brings together experts from leading financial institutions, technology firms, and academia to deliberate on these evolving trends. We are honored to host distinguished leaders such as chief guest, guest of honor, keynote speaker, along with the experienced panelists and resource persons who will share rich insights throughout the day. The day-long program includes inaugural session featuring leadership perspective from our distinguished guests, a panel discussion on driving financial transformation, the role of emerging fintech technologies, and subsequent to that, 7 parallel workshops designed exclusively for our PGDM students, covering areas such as technical analysis, credit underwriting, valuation, data visualization, financial modeling using Python, algorithmic trading, and financial statement analysis. We hope that today's discussion will provide valuable learning, stimulate critical thinking, and inspire innovative ideas among participants. I extend my heartfelt gratitude to our respected director, all committee members, faculty, colleagues, industry experts, and our enthusiastic students team for their dedication in organizing this conference. We look forward to a meaningful and enriching day of learning and collaboration. Thank you all.
Thank you very much, ma'am. We are eagerly anticipating the insightful discussions planned ahead.
Moving on, it is a distinct honor to introduce our chief guest, Ms. Vibha Jain, a highly accomplished banking leader with over 2 decades of experience in credit, lending, and MSME finance. She brings deep expertise across the full lending value chain, including credit appraisal, risk underwriting, portfolio analytics, policy formulation, and SME asset expansion. During her 18-year tenure at Axis Bank, she held leadership roles in SME and rural lending. She oversaw high-value credit proposals, strengthened credit governance frameworks, improved asset quality, and drove data-backed portfolio strategies across multiple regions. Her rigorous approach to risk and her strategic focus on SME growth earned her strong recognition within the industry. She later served as Executive Vice President and Zonal Head at Equitas Small Finance Bank. Ms. Jain now leads digital credit transformation at NewGen Software as part of the Banking Center of Excellence for Digital Lending. Her work focuses on modernizing lending workflows, automating LOS/LMS systems, embedding regulatory compliance, and enabling faster, paperless, insight-led credit decisions for financial institutions. A gold medalist from IMT Ghaziabad, she continues to contribute to academic forums and social initiatives with equal commitment. Ladies and gentlemen, please join me in welcoming Ms. Vibha Jain.
Thank you, LBSIM team, for inviting me for this conference. And a very warm good morning. Namaskar. Warm greetings to everybody, to my dear students here and the members on dais. And I think it's my true privilege to be here at this conference on driving financial transformation, the role of emerging fintech technologies, a subject which is very dear to my heart. So while I represent NewGen Technologies and I am a part of this IT company, which is a product company for last 4 years, but the blood in my body is of banking. So I'm a banking consultant basically and heading the digital lending solutions group in NewGen Technologies. So before we proceed, I'll just play a jingle and you will raise your hands if you are able to recognize this. How many of you recognize this jingle? Almost everybody? Yeah, so that's our life today. So with this, I would like to start my small note. I'll not take much time. And how many of you would have made some payment today using UPI today? Most of us. So that's the relevance of fintech world in our life, yeah? So we are at the right place, at the right forum, and for the right conference. So you can be awake now. So, so banking today is no longer something we go to. You know, once upon a time in India, people used to say, आज तो बैंक का काम करना है. तो मतलब आज का पूरा दिन गया banking में, right? But now it's something we carry with us. We don't have to devote 100% time for banking. We don't have to visit those brick and mortar branches, but it's there just at the click of a button. So the Indian banking story ranges from queues to QR codes. Banking is the backbone of any financial institution, right? We all understand. And India's banking story is nothing short of an epic. There was a time when opening a bank account meant filling endless forms, standing in serpentine queues, and holding passbooks thicker than your R.D. Sharma's. You've read R.D. Sharma? Everybody must have. So the passbooks and the paperwork used to be thicker than that. But today, that brick and mortar institution fits right into your hands and pockets. And with just a few taps on your smartphone, you can transfer money, you can open your accounts, you can apply for loans, you can pay your bills, you can download your statements, and you can even invest in mutual funds just while sipping your matcha at home. Right? So that's the shift. And it has been an evolutionary shift. It's not a day's task, it happened over years. So truly, the passbooks have given way to the passwords and CAPTCHA today. And when we talk about Viksit Bharat, so our Prime Minister has a vision of Viksit Bharat for 2047. But as far as the technological innovation, the fintech revolution is concerned, I think we are already there. So I believe Bharat is already Viksit in financial transformation, but yet unstoppable. AI is the next revolution. It's the buzzword and everybody is talking about it. And certainly it's going to be even more transformative. So we are not just adopting the global trends. Mind you, generally we have been following the global trends. But here when we talk about the digital infrastructure in India, we are not adopting the global trends, but we are setting new benchmarks for the world. So let me tell you, at Newgen, it's since last 4 years, we handle banking clients across the globe. So from Europe to US to African market to APAC, and when we see India. So in terms of the fintech innovations, the digital automation and the advancement, I would say that India is really at top of the world. I can vouch for it because we are developing systems everywhere across the world. The kind of API integration system which is available in India, the kind of automation, the kind of direct data fetch from the source, that ecosystem is available in India is not present anywhere in the world. So whenever we take our domestic product to a global client, they say, nahi, itna automation nahi chahiye, hame thoda kam bhi chalega. So it gives us a feel of pride that yes, India is ahead in this stream, which is the future. So the question is no longer, will fintech transform banking? It already has. And the real question now is that how? The real question here is that how we can harness this transformation responsibly, sustainably, and inclusively for the next billion users. So I think we all can be proud of this fact that India is already there as a part of Viksit Bharat. Now we all need to understand, I don't know how many of you are have opted for the finance course in this group? The banking and finance? Okay, good. So a majority of you. So I think you would be aware of the India's digital financial infrastructure, because without an infrastructure, you really can't do much. So over the past decades, India's banking ecosystem has undergone a remarkable transformation powered by digital innovation, regulatory foresight, and the entrepreneurial spirit of a fintech community. And the base, that is the digital public infrastructure, is the India Stack. Have you heard of India Stack? India Stack? Okay, so I'll tell you, India Stack is a digital public infrastructure which the government has given, which enables Aadhaar-based services, which enables these UPI transactions when we talk about. It enables e-signing, that is electronic signing, digital signing, and digital stamping. And actually, it is based on the paperless, presence-less, and the cashless layer for the economy. So it is, I think, a very important subject. Today or tomorrow after the conference, once you go back home, do study about the India Stack, because that is the base foundation on which this entire fintech story is built. So this ecosystem is not only enhancing customer convenience, it is strengthening transparency, efficiency, and trust in financial services. Think about it. You book a Ola cab and you pay through Ola Money. You shop on Amazon and you pay through a buy now, pay later option, right? You tap your card on a POS machine or simply scan a QR code. You can complete your KYC through a video interface with the banking official, or you can chat with your bank on WhatsApp also, right? And you can open your account. You can submit your KYC documents. KYC, everyone is aware? Know your customer documents. Earlier, we used to take photocopies of our passport, Aadhaar, PAN number, sign it, self-attest it, and then submit to the bank for opening a bank account. but it is no more required. You simply authenticate your DigiLocker account with the bank and your KYC is submitted. Or you authenticate with Aadhaar-based OTPs and even your face scans, fingerprints, all of these are being enabled through technology. So that is the transformation which we see in our daily lives. All this is the result of an incredible technology stack, which I just talked about, that India has built and the world is learning from us. So believe me, this India stack is the basic infrastructure which Indian government has given for these fintech innovations. Now, when I talk about banking, lending is something which is an integral part of it, right? Because it is the basic system which is supporting the retail individuals, which is supporting the enterprises, which is supporting the new startups, and also the established business houses. So borrowing historically, again, used to be a pain. If you have to go to a bank for a loan, first nobody used to entertain, है ना? You visit a branch, they will say, अच्छा loan चाहिए, अच्छा बैठ जाइए, है ना? 15 मिनट तो वो बिठाते थे. And then they used to start asking question after question after question. And then once the story of question after question used to end, then paper after paper after paper. And then you are completing your file, you are submitting the file. Ultimately, banks keeps on asking for more information. Then you try and get hold of an agent in between. आप किसी DSA को या broker को पकड़ेंगे. And you'll say, हमारी file थोड़ा जल्दी move करा दो. Then that broker may approach the bank and get your file processed. It will take days and weeks and even months. So for commercial loans, it used to take months. For large corporate infra loans, it used to take more than 6 months. 6 months to 1 year used to be the time period. But no more. Thanks to this digital infrastructure again. So like you can open the bank accounts, lending has also transformed. So in retail loans, you can avail loans, you can submit all your application, you can avail those loans within minutes. So within 10 minutes, 15 minutes, some would say even within 5 minutes, you will get a loan approval, and in another 10 minutes, you will get the funds in your account. So what better you can think of? And just, it's a journey without any manual intervention. So you are simply going to the website of the bank, you are clicking certain buttons, you are giving some information, direct fetching of some information happens there online, and you get your approvals. Yes, subject to all your records are clear. So that's where the retail lending has moved to. So now if you have to buy a home loan, you need not worry. If your track record is clean, the bank will get to know on its own. So that's the kind of transformation we are talking about. And when we talk about commercial loans, whether it is for MSMEs or is it for commercial loans, the entire process is automated. While you may have to visit the branch for underwriting, but at the branch level also, there is so much automation that just you provide your PAN number, and of course, with your consent through OTP-based mechanisms and links, the bank officer, the credit analyst is going to find out more information than you yourself know. So probably he is going to ask you, okay, you have something at that address also? So you'll remember, अच्छा वो हमने rent पे कभी लिया था, and it's not operational now, but it is still there in the records. So that officer, through your PAN number and some basic information, again, I'm saying authenticated by you with your consent, will be able to fetch more information than probably you would remember. So those having a clean track record, their applications will be processed smoothly, transparently, without any mistake, and you can get efficient approvals and disbursements. But those who wanted to play with the system earlier, submit forged bank statements, or try to give some kind of a balance sheet which is cooked up. So there is no way for them now, because direct integration with MCA site, with the GST returns, with bank statement analysis, there is no way that person can get through the system. So I think it is good and bad both ways. Bad for those who were taking advantage of that information asymmetry, and good for the clean recorders. So eventually we all stand to gain. So that's the digital lending, which has transformed from pain to pleasure. So I think I'll just talk a little about digital lending, especially because NewGen is developing softwares, and let me tell you that we are pioneers in developing the loan origination software for MSMEs, for large corporates, and for infra lending. No other player in the IT stream is having a software which is configurable. So earlier, there were companies which used to offer solutions which were point solutions, as in you can't change anything. But you see that daily you read in the newspapers and you get to know that the financial space is so dynamic. It is regulated by Reserve Bank of India, right? So the policies are so dynamic, the bank has to operate within that framework. So if your system is not configurable enough, if your system is not agile enough to imbibe those changing policies, then the point is lost. So Newgen builds systems which are highly configurable. Today, a policy change comes, and here it is there in your system tomorrow. So it's a low-code platform on which we have developed loan origination systems for MSMEs, large corporates, infra lending, project finance, LRDs, supply chain finance, trade finance, and so on and so forth. So so I was talking to ma'am that whether students from banking and finance are there and they would be interested in this fintech innovation, understanding more behind it, how it is built, so you can always explore being a part of Newgen, and you can get this wonderful opportunity. And again, let me take a moment of pride. So this Newgen company, it is completely indigenous, promoted by Indian promoters, and we are global pioneers and leaders in the digital loan journeys. And we have helped banks and financial institutions across the world transforming their lending journeys in truly different ways. So largest of the banks, ICICI Bank, IDBI Bank, Canara Bank, Punjab National Bank, State Bank of India, these large private and public sector banks have been availing our systems and achieving efficiencies at scale. Now, with innovation comes responsibility. So everything comes at a cost. So challenges remain. Cybersecurity, data privacy, regulatory compliance becomes even more critical as digital adoption accelerates. You agree? How many times do you have to give your consent whenever you download an app? How many times do you have to give a consent? It asks so many questions. I will access your data. I will access your gallery. So will you allow me to access your location? Does it happen? And then it'll give you options. You'll allow while visiting the site, always, or sometimes only this time. So you'll have 2-3 options, right? So while they are taking consent, but you see that it is there whenever you are using this financial technology. And it is a big challenge also, because this data is yours, but somebody else is accessing. And data is like gold today. It's like actually like gold today, because this data is being used at various places, at so many sources, and you don't know for what. So like sir was mentioning that while doing underwriting, they do a lifestyle mapping also. How do they do that lifestyle mapping? Because they had taken consent when you downloaded that Amazon or whatever app on your phone, and you allowed them, you gave your consent to access your data. So some institution elsewhere is using that data to do his or her underwriting, right? So this privacy of data, the consent management, the individual's right to access. So you have the right to whether give your consent or not. You have the right to allow the access for that data for that particular purpose or for other purposes. You have the right to correct that data. In case you feel that there is some correction, there is some edit, there is some revision in the data, then you as an individual should have a right to correct that data. And you as an individual should also have a right to have the data deleted, erased from the database. But as it is said, rahe na rahe hum, but hamara data to is digital space mein rahega hi. So that's how data is operated. But the good part is that the DPDP Act, have you heard of the DPDP Act? So you have heard, yes, Digital Data Protection Act 2023, which has come in place. That is the beginning, and regulators are going to make it more strict. So I think this is another piece which I would say that you know about it, but read more about the provisions of the DPDP Act. And I would request the management, in case these subjects can be included in their course as well, the India Stack and the DPDP Act. So banks and fintechs must therefore balance innovation with responsibility, ensuring that technology strengthens the financial stability, consumer protection, and inclusion. So I'll not take much time. I don't want to bore you. So as we stand at the crossroads of finance and technology, one thing is very clear. India is not just witnessing a fintech revolution, but we are leading it. The responsibility now lies with all of us, banks, fintechs, regulators, innovators to ensure that this transformation is not just smart but also safe, not just fast but also fair, not just profitable but also purposeful. Together, let us build a financial ecosystem that is trusted, transparent, and truly inclusive, one that empowers every Indian from the boardroom to the last mile. The momentum is unstoppable with digital rails in place, AI accelerating intelligence, and India's innovation spirit at its peak. We are entering the most exciting decade in financial services. There is a chance to redefine what banking means for billion plus people. So let's collaborate, innovate, and elevate. Let's ensure that the next wave of financial transformation is bold, responsible, and uniquely Indian. Because when Bharat builds, the world takes notice. The future for finance is here, and it has Made in India written all over it. Thank you. Jai Bharat, Jai Hind. Thank you.
Thank you, ma'am, for highlighting how finance is rapidly moving towards a paperless future, including the role of digital lending. Your perspectives have truly added immense value to today's conference.
It is my privilege to introduce our guest of honor, Mr. Ajay Chaudhary, Chief Executive Officer at NIIF Infrastructure Finance Limited. He is a visionary business leader with over 27 years of experience in infrastructure and renewable energy. His expertise spans project finance, portfolio management, asset optimization, and long-term value creation. He has a proven track record in originating, structuring, and executing large-scale investments and has managed portfolios exceeding $4 billion. His work consistently focuses on operational efficiency, financial optimization, and sustainable returns. A hallmark to Mr. Chaudhary's leadership is his ability to build and guide high-performing cross-functional teams. He is skilled in identifying high-growth opportunities, unlocking value within assets, and delivering scalable, future-ready outcomes. His approach reflects strong financial acumen and a deep understanding of India's evolving infrastructure ecosystem. He has collaborated extensively with global investors, domestic developers, policymakers, and regulatory bodies. His stakeholder engagement ensures alignment between investment strategies, national priorities, and global standards. Mr. Chaudhary is also a strong advocate for integrating ESG principles into infrastructure financing. He emphasizes sustainability, responsible growth, and long-term societal impact across all projects. Through his leadership at NIIF Infrastructure Finance Limited, he continues to enable capital flow into transformative infrastructure initiatives. His contributions support India's broader economic ambitions and environmental objectives. Ladies and gentlemen, please join me in welcoming Mr. Ajay Chaudhary.
A very good morning to all present on the dais, and a very good morning to all the new generation which is sitting in front of us, who will be taking the mantle of the future leaders in the Indian corporate or the entrepreneurial sectors. So just, I will not be getting into how the fintech is, what is fintech and how the fintech is, helping the financial institutions to build and, improve upon their performance. I think Vibha on her part has explained it very, very well. So both Vibha and myself are coming from the lending institutions, both being the bankers. She was more on the, the retail and MSME side, and I am more on the wholesale financing. So more on the project financing, underwriting, and managing large ticket size transaction. So I would just like to, share with you some anecdotes through my journey through this infrastructure space, how this emergence of technology, which we currently are calling the fintech. It is not, it should have been other way around, the technology-led financial innovations. Right. So the basic fundamental problem the world currently is facing is not the dearth of the capital, which is, you know, people believe that, you know, not much capital is available, and hence the projects, the individuals, the retail loans are not happening. It is not like that. The capital is enough. The fundamental problem we are facing is that current financial, you know, institutions, we don't know how to deploy that capital to the right, you know, opportunities, to the right set of people, the people who actually want that capital, and hence not able to put the right risk weightages. So that is a fundamental, you know, issue which the world economies are currently facing. It is not the dearth of capital, it is the right way of deploying that capital to the right opportunities which, you know, evolves the society, it evolves the marginalized groups so that their lifestyle increases, and in turn, the overall ecosystem, the overall economy, you know, the fundamental, the base of the triangle which we keep on talking about, that, you know, the majority of the people are at the lowest, you know, portion of the triangle, and a very limited few are at the top of the triangle. So until and unless your financial democratization, you know, which is happening, doesn't reach to these marginalized people, the people sitting on the top tier of the triangle or the second tier of that triangle, their, you know, ability to generate wealth for the society, for the economy per se, on a whole, get restricted. Because whatever we produce, you know, the companies who are producing, products, be it your, you know, clothing companies, or, you know, be it your, you know, Marutis of the world, until unless the number of people, number of people participating in their respective market increases substantially, from where the incremental delta sales will happen, from where the incremental PAT are going to happen. So that is a fundamental issue that, you know, the world economies are facing, that everywhere we are seeing that cost cutting is happening. The revenues, the profitability is not coming from the increased, you know, the turnovers. It is just coming how we are, you know, squeezing the cost. So fintech is, I won't say it as a disruption, it is the response of the system to this systematic failure of the financial institution of not being able to deploy the capital profitability in a profitable manner. And this disruption, you know, is going to happen, and it's reshaping the current financial ecosystem worldwide. And it is going to, you know, push the erstwhile thought processes, as Vibha was mentioning, that, you know, opening a bank account was a pain. You know, my first salary which I got, so when I went along with my dad to open an account with one of the PSU banks, so the whole experience, you know, it was such a, you know, horrifying experience that it took us almost 2 hours to open a bank account, and the branch manager was moving from one desk to the other desk to make sure that that account gets opened in that particular day. And end of the day, it took us almost a week to start operating that bank account. Last Wednesday, you know, I just joined this new organization of mine on Monday, and Wednesday, you know, the new age bankers came to our office to open this account for me, and it took us straight 5 minutes to open that account. As Vibha, you know, explained that India Data Stack, now that has become such a powerful tool in the hands of all the financial intermediaries that decision-making, you know, your KYC, cross-checking and everything happens in just seconds. It just took us 5 minutes to end-to-end solution, and my account with my passbook and everything was ready. So that is, you know, the strength of this financial, you know, the fintech which is happening. And the biggest thing which the fintech currently is doing in this country is taking, you know, the financial, inclusion to the most marginalized communities, the most marginalized groups in this country. I think all of us would have heard about your microfinance. So this particular, thought process, the institution was created by somebody who is currently heading the Bangladesh government way back in 2005, 2003. And in India also it started somewhere around 2008, 2009. But that point of time, people were not very, they were not very, gung-ho about this whole sector because it involved, providing monies to, marginalized communities in hinterlands and, getting the data from those guys and then communicating with those individuals for the repayments and everything was pretty tedious job. But now with this Aadhaar card linking, the KYC is taken care of. And as Vibha was explaining, when you download a particular app, so it asks your permission to share what is happening on your mobile phone. So your location, data location, your Paytm, how much Paytm you are using, how much UPI you are using, how much of money you are receiving through UPI and all. So that is helping the new age, your microfinance companies to spread their, coverage areas to the remotest parts of this country. And individuals who are getting a loan of say 40,000 rupees or 80,000 rupees or 1 lakh, which are actually getting utilized for the improving their earnings, improving their lifestyle. And hence they are, moving into the overall economic cycle of this country. And until unless that marginalized communities don't, start accessing this finance, improving their lifestyle, improving their earnings, improving their cash flows, your GDP of our, aim of $10 trillion economy by 2030, 2032 will never be achieved. Okay, now let me just share with you some anecdotes how the tech is helping the infrastructure companies. Right. So at our this present company of mine, so we refinance a lot of operational infrastructure projects, mainly on the solar renewable side, roads and ports. Now, historically, how the infrastructure financing was happening in this country was that we used to hire the LIs, your lenders engineers, so they will be given the responsibility of going on the site, figure out what exactly is happening on the site, give us a feedback of the development happening on the sites, and dependent upon that, we would release the funds when the projects were under construction. Now that, had some fundamental issues, especially that the whole process of this information flow was quite asymmetric. And it used to run, there used to be a time delay of at least 3 months. So once in a 3 month, the LI will go on a site, do its due diligence, come back and tell us, okay, site, as per the last records, it has done the work so much so, and hence they would require XYZ of disbursements. But they would never be able to capture, okay, once they have moved away from the site, what exactly has happened on the site. And when we used to disburse, and next time when the LI used to go and come back with his report, so many times we would see that the work the company should have completed during that particular quarter is not happened. And there is a divergence between the funds which we have given and the work which should have got completed by those funds. So there used to be always a gap, and then there will be a to and fro happening between the lending community, the lenders and the company. Okay, we have provided you so much of capital, where exactly the funds have gone, because we don't see the consummate work being done on the site. And then there will be a trust issue between the two teams. And that trust issue sometimes used to go so bad that the next line of disbursement will never happen. The bankers will simply, shut tight on the disbursements and will not allow the funds to flow, and that will have incremental issues on the project. So the project automatically, the timelines will start increasing, the cost will start, going out of control, and then the two parties will keep on blaming each other, okay, you are not disbursing, hence we are not able to complete the project, and ultimately the public money, which we as the bankers are the custodian, so that became a challenge. So during 2005 till 2011-12, the kind of the NPAs, the banking sector on the wholesale has seen was never, we never had that kind of a situation erstwhile. And the kind of money we lost and the write-downs which the financial institutions on the wholesale had to take were humongous. Now, how the technology is helping us in handling this situation. Now, during the construction period, so you have direct access to what is happening on the site. So you have the AI-driven programs which captures the daily progress of the site. For example, a road, how much of kilometers have been laid, what all equipments have been mobilized, how much of money is getting spent. So that report I'm getting on a daily basis at my HO. So I don't have to be dependent upon my LI, which was giving us a report every quarter. So now on a daily basis, I'm able to track the progress of the project, and in a week's time, if any pointer or any data point shows us a red flag, so that we are able to track and communicate with the company on a weekly basis and ask them tough questions ki why this thing has got delayed, and if a particular thing is getting delayed, and what is the repercussion of this delay, whether the project is going to have a time overrun, and whether as an institution we can sit with you, understand the issues, and can we provide a real-time solution to those, instead of waiting for a quarter to get a report, understand what is the problem, and already we are going to see a 3-month delay. So that is the technology, the inclusion of technology, the incorporation of technology in our lending practices are helping us. Now coming to the operational projects. So now we have a direct access to the SCADA. All your renewable projects, all the power generation projects, they speak with their utilities, the way they are supplying their power on a daily basis. The same conversation the system are happening, the same conversation that system is doing with our system. So instead of waiting for the company to supply us a report after every month that okay, we during this month we have generated so much of energy, so we are getting that information on a daily basis. So again, the tracking has become so easier for us. My manpower, which was going into analyzing the dearth of information, the Excel sheets are coming from various companies, and then coming and telling the management, okay, XYZ projects are getting into the red category. They their numbers, their projections, the real energy generation is way out and is not comparable to what we had projected. So that used to happen once in a month. Now that is happening on a weekly basis. Again, we are able to take corrective action much earlier than your EMIs are getting due. So this is the way your the technology emergence and convergence of technology with the financial acumen is helping the institutions. On the retail side, I spent 2 or 3 years working on retailization of the energy transition. So again, there was that moving the diesel and petrol vehicles to CNG first, and then to your EV section. So there, having spent my full career on underwriting large ticket transactions, suddenly I was faced with a situation where I was to write undercut checks for 40,000, 50,000 rupees. And that was a huge transformation for me. That doing a due diligence on a say $200 million project, now coming to just a 50,000 rupee ticket size transaction. So during those days when we started interacting with the new gen fintech companies, and then they started sharing with us, okay, what all data points those companies can help us through their apps to decide whether an auto rickshaw driver who is earning say 20,000 odd rupees on a monthly basis, whether that individual is fit to be given a loan of 40,000 rupees. And I was seriously got amazed when somebody came and told me that once the gentleman allows us to extract certain data points from his mobile phone, we would be able to tell you whether he is staying in a jhopadpatti or or a proper colony by simple analyzing one data point, that how his mobile phone is getting charged. If it is getting charged in one single shot, this means that he is staying in a location where electricity supply is there. The pin code will be a better one. If its mobile is getting charged at a different times, cut ke agar charge hota hai, this simply means he is staying in an area which the the infrastructure is not very good. He might be staying in a jhopadpatti, and hence you can decide whether you want to lend to this gentleman or not. So here we were supposed to undertake transaction giving funds to individuals who were not banked. So they had no banking history. So there was no CIBIL scorecard. Ki, okay, this gentleman ka CIBIL itna aaya hai, it's more than 650, 700. So automatically, the system will throw up the decision ki, okay, you can lend this money. So much of, data points you can source, as Mr. Gupta just mentioned, the lifestyle understanding of an individual, how that is helping to curate your financial, instruments, your EMIs. Erstwhile, if you're going to speak with your parents, and if I think most of individuals who are sitting out here will be having a home loan in their, houses, right? Most of them. So you will see that your EMIs would remain constant and similar throughout the tenor of those loans. Now you have the ability of curating those EMIs based on the cash flows being generated by you guys. And that is something which the next generation is asking us. Instead of financing from a mindset that we are lending a 30 lakh rupee loan and the house value is 45 lakhs, so we have some asset coverage. Now the time has come for everybody to look for the cash flow financing. What is the ability of the lady or the gentleman to earn, and based on that earning capability, how much of money we can lend. So all those new things are happening, and this is going to as Vibha mentioned, would be unstoppable. So from an industrial practitioner of financial knowledge, so my suggestion to the individuals who are sitting out here who plan to take a finance is just to make sure that you don't restrict yourself by the theoretical knowledge which you're going to gain from readings the Damodarans of the world or the Khans of the world. Just try to integrate that knowledge, learn how to integrate that knowledge with the emerging technology which are being driven by the AI. Just also pay attention, also learn that aspects, and the future will belong to individuals who will be able to merge these two things and come out with a solution. So anybody who wants to build a career on the AI front, so don't be bothered about what kind of app you're going to make. First and foremost, try to figure out the friction which is there in the economy, how that friction would be we will be able to overcome by some financial product, and how that financial product can be run through an app. So that should be the thought process. Thank you everybody for giving me this opportunity to share my views.
Thank you, sir, for such enriching words. Your expertise and clear perspectives have added immense value to today's conference. We deeply appreciate the time and guidance you shared with us.
It is my honor to introduce Mr. Mudas Shastri, a result-oriented leader with 2 decades of experience across business strategy, government channel development, B2B, and operations management. He has consistently driven revenue growth, market expansion, and P&L optimization through innovative strategies and strong stakeholder collaboration. Mr. Shastri currently leads the government vertical at Havells India. In his earlier roles, he played significant leadership roles in the B2B sector, strengthening networks across government and corporate customers. He is widely recognized for his expertise in market expansion, channel development, strategic planning, and operational excellence. Mr. Shastri plays key roles in several prestigious institutions under the Lal Bahadur Shastri Educational Society. As a board member, he supports the growth of leading institutions such as Lal Bahadur Shastri Institute of Management and Lal Bahadur Shastri Institute of Technology and Management Indore, with the Hyderabad campus now in planning. He also advises Lal Bahadur Shastri Seva Niketan and multiple polytechnics and schools that provide quality education and vocational training across Uttar Pradesh. Mr. Shastri has also been recognized for his training and sales leadership, receiving the LG Citizen Award and a national award from MTS India. He holds an MBA in Marketing and Finance from Lal Bahadur Shastri Institute of Management and a BA in Political Science from Sri Venkateshwara College, Delhi University. He completed his schooling at St. Columbus School, New Delhi. Ladies and gentlemen, please join me in welcoming Mr. Mudit Shastri.
Good morning, everyone. Every time they give this introduction, so firstly, I get goosebumps getting to know that I've contributed so much. I don't even realizing. Today, fortunately, my wife is not here. Otherwise, she always gives me the looks that, you are the same person who on a Sunday will struggle to heat water in a microwave to have warm water in the morning. But you're doing so much as per the introduction. So thank you for the lovely introduction to the people who gave. Thanks to Lal Bahadur Shastri Institute of Management for inviting me for such a prestigious event. I would, of course, like to thank the people on the dais here, Dr. Praveen Gupta, Mr. Ajay Chaudhary, Ms. Vibha Jain, Dr. Swaranjit Arora, and of course, Dr. Rekha Gupta ma'am. As some of you might know, I'm also an alumnus of LBSIM. I joined in 2004 and passed out in 2006. And I think from that batch, Rekha ma'am is the only faculty now present here. And I mean, the conference will go on, but I always ask her, she never tells me that how has she managed to look the same even after 22 years. It's something that we all would love to know, and that's a separate discussion I would like to have with her post this conference. So, as I said, it's always a pleasure to be at the campus and meet the students here, meet the director sir and all the faculty members. So I'm, of course, not from a finance background like my predecessors who gave the presentation here are. So my discussion would primarily be outside the financial sphere, but related to finance. I will, of course, try to give my own expert advice. Being a sales guy, we have the habit of talking on everything. So we can talk about what Trump is doing, we can talk about what Modi ji is doing, we can talk about what Pakistan's Prime Minister is doing or Bangladesh current Prime Minister is doing. We can also talk about fintech and the innovations that it has gotten. And so I'll try to do that here as well. So fintech is transforming India. There is no doubt about that. We have to accept it. We have to live with it on a daily basis. Most of the new concepts that have come in, be it Blinkit, be it Myntra or Tata Click, everything is related to fintech. Couple of months back, it was a Friday morning. I got into my office in casual attire, and I got a call from a MD based out of Gurgaon. He wanted to meet me for a critical meeting. I'm in the B2B business, so wanted to meet me for a critical meeting, and I had to rush instantly from office, which is in Noida, to Gurgaon. I had to reach there by 12 o'clock, and I was in my t-shirt and casuals. So thanks to Blinkit and the way it seamlessly manages the payment model, by the time I reached the office building in Gurgaon, I had ordered a formal shirt, and I had ordered a formal belt, and I ordered a formal shoe, and I was able to go inside the meeting wearing all formals. So that all has happened because of the innovation that fintech has got. I mean, be it Blinkit or Flipkart, all these things won't be able to sustain if there's no innovation in fintech. So fintech has been historic. It has started everywhere. It has penetrated everywhere. around a year back, I taught my mother how to use Paytm, and 4-5 months back, we had to go for a marriage, and one evening I came, we had to travel outside for a marriage, and one evening I came, and the guard handed me over 7-8 packages of Myntra, and out of that, 6 packages were ordered by my mother, and one was ordered by my daughter. So, both of them are actively using such opportunities, and that is how the country will evolve, that is how the country is evolving. But there are challenges to it. Challenges always remain. Everything that grows in a fast-paced manner, like fintech and innovation has grown in fintech, it will always create challenges. One of the biggest challenge that I feel is the marginalization of certain sections of society. For example, of course, there's the rural segment is also getting tapped, but the pace at which the urban sector is getting tapped in such kind of innovation, the rural segment might not be able to catch up. MFI is there. It's of course there, as Ajay sir mentioned, but the speed at which innovation has come in the rural market, the urban sector where we have accepted it, the same speed is not there in the rural market. And the way this country is managed, the way this country has managed itself since long, there's always been a difference between urban and rural. There's always been a difference between educated and non-educated. And we have to ensure, as fintech innovators, that difference is reduced. We don't want to create another segment where people are using fintech innovations and there are people who are not using fintech innovations. So that difference has to be managed in such a way that we are able to create a common ground for everybody. And that's the challenge going forward the fintech innovation companies and fintech companies will face. And that is the challenge that you guys will face once you start working in such companies, how you can seamlessly manage the network between the rural and the urban segment. Because that is one segment which always somehow has been left behind in a lot of previous initiatives that have been taken by a lot of people across the country. That is where I think Lal Bahadur Shastri Institute of Management has made a big difference in terms of setting up colleges in small villages like Manda and Solsenda district, Manda in Uttar Pradesh and Solsenda district in Madhya Pradesh, where some of you might have gone during the rural program as well. Who all have gone to Manda Institute? Oh, that's nice. And who people have gone to Indore Institute as well? Indore? Who all have gone to Indore? So you all have stayed in a Manda campus. You would have stayed in the Indore campus, and you would have experienced how this is impacting. And using the finance conference experience this time, maybe the next generation, next batch that goes there, you should try to understand how much this fintech is innovating and how much the fintech is contributing in those regions of the country. And that is where the commonality will come, and that is where you all will understand how much more we can do when it comes to fintech and financial innovation. Financial innovation is not just about fintech. I am fortunate to be born in Lal Bahadur Shastri Ji's family. I'm his grandson. You all are fortunate due to your hard work. You have been blessed to be studying in Lal Bahadur Shastri Institute of Management. Of course, there are faculty also and some admin people also working there. So it's a pleasure to all of us, benefit to all of us that we are related to Shastri Ji in that way. But Shastri Ji's biggest, I would say the biggest inspiration for people like me has been his financial prudence. And financial prudence is something that is very important for each one of us. So financial prudence basically means that when you are spending any money that is not related to you, like it's not your own money. When you use money of the institute, when you use the money of the company you work in, or when you use the money of your parents or your brothers or your sisters, you have to be very considerate about it. Like, just to give a small anecdote of Shastri Ji, when Shastri Ji was fighting for India's independence, during that time they wouldn't get any, they were not working anywhere. It was just complete social service. So the Congress government through Congress party, the erstwhile Congress party during the freedom struggle, would get some funds from certain individuals, and they would give some basic salary, basic payment to each of the freedom fighters based on whatever they could support with them with. And during one of these years, one of a very dear friend of Shastri Ji had come to his home and in Allahabad, and he sought for some help, financial help. And of course, Shastri Ji, during that time, most of the freedom fighters were struggling, and he was also struggling financially. So he said, I don't have much of any money to spare. I don't even, we are not able to manage things properly at home, so I won't be able to help you. This discussion happened while they were having their meal. And my grandmother heard this conversation, Lalita Shastri Ji. And when Shastri Ji went out for his meeting with his party workers, she just went up to his friend and asked him that how much money you need. He needed some minor amount of money, and she was able to give it to her. And while going out, he thanked Shastriji, saying that very nice of you that your wife was able to help me with certain amount of that money, whatever he needed. And then Shastriji walked in back to the room and asked my grandmother that, how did you manage that? Because, I mean, we don't have money. And she said that whenever you give me like 2-3 rupees to manage the house, I save maybe 10 anna, 5 anna, something like that, and I keep on saving some money. So he immediately wrote a letter to the Congress party saying that there is some payment that is coming to me which I'm able to save every month. So that means that I'm getting extra money. So you reduce that amount for my salary and distribute it to someone who needs it more. So that is the highest level of financial prudence I have ever heard of. I will not be able to do that on my own, despite being his grandson, and I don't expect all of you to do it on your own as well. But I do expect that when you are reaching your various positions in your job, in your businesses, you should know that even though you have the authority to spend the money that the company you're working for, you need to have the right logic, right reason for spending that money. For example, if you're traveling and you have a budget of staying in a room of 12,000 rupees, but you can stay in a room that is of 18,000 rupees. That is also financial prudence. You should know to use it properly. If you're traveling, if you can move around if you move around in an Ertiga, that is also okay as against moving around in Innova. That is also financial prudence. So what I'm trying to say is that we have to be honest in terms of utilizing the money, the power that we get because of the position that we have. And every innovation will eventually lead to that only, that we are able to create a network, a sustainable environment where we can work in a situation where we are creating profitable setup for everybody involved in the company or whichever business you're doing. And as Shastrians, as everyone who's studying and working here, you have got that Shastri in you, whether you like it or not. For the rest of your life, you'll always be known as a Shastrian, and that's what it is now. And you have to make Shastriji proud and carry his name through actions that define his legacy of financial prudence. And if you're able to do that, you will make all of us proud and yourself proud as well. So with that, I would like to thank the Institute again and Dr. Gupta and Dr. Rika Gupta for inviting me for the event. And hopefully we'll see all of you again soon. Thank you.
Thank you, sir, for sharing your valuable time and comprehensive thoughts with us. We truly appreciate your insights.
Today, we are pleased to launch 2 edited volumes emerging from the International Research Conference, IRC, held on 1st February 2025. One published by Atlantis Press, part of Springer Nature, and the other by Excel India. These books compile selected manuscripts presented at the conference, which centered on the theme of resilience and sustainability in business and management. The volumes bring together research spanning sustainable finance, operations, behavior, and technology, reflecting the rich discussions of the event. We extend our appreciation to all authors, reviewers, and editors who contributed to shaping these proceedings. For this, I request Professor Praveen Gupta, Professor Rekha Gupta, Dr. Swaranjit Arora, Dr. Tanzeem Hasnath to kindly come forward. I also request all the dignitaries on this dais to please come forward. Thank you so much.
It gives me immense pleasure to invite Dr. Pankaj Vashne, Area Chair, Finance, to grace the stage for the official release of annual magazines of Marg from the Nivesh Investment Club of LBSIM and Life of Finesse, the Finance Club of LBSIM.
This release marks a significant milestone for both clubs, and we eagerly look forward to the valuable contributions Marg and Life will continue to make in the academic and professional domains.
I also request the dignitaries and the coordinators of the clubs to please join us at the stage.
Yes, sir. Yes, sir. Yes, sir. Yes, sir. Yes, sir. Thank you, sir.
May I now request Professor Praveen Gupta to present a memento to Ms. Vibha Jain as a token of our gratitude.
May I now request Professor Rekha Gupta to present a memento to Mr. Ajay Chaudhary as a token of our gratitude.
May I now request Dr. Swaranjit Arora to present a memento to Mr. Mudit Shastri as a token of our gratitude. Thank you. Now, I would like to request Dr. Rosie Chauhan, Faculty, LBSIM, to present the vote of thanks for the inaugural session.
Good afternoon, everyone. On the behalf of Lal Bahadur Shastri, Institute of Management, Delhi, I am privileged to deliver the vote of thanks for the inaugural session of National Finance Conference 2025. At the core of this year's theme, Reinventing Finance through FinTech Innovations, lies the recognition that the finance today is undergoing a profound transformation and driven by digital innovation, data analytics, and emerging financial technologies that are redefining decision-making, governance, and value creation. The deliberations during this inaugural session have captured this transformation with great clarity and depth. We are deeply grateful to our chief guest, Ms. Vibha Jain, for she is a distinguished banking consultant and MSME specialist for her insightful address and for sharing valuable perspectives drawn from her extensive experience in banking, MSME lending, digital automation, and financial inclusion. Ma'am, your reflections have provided a strong and practical foundation for the discussions ahead, and we sincerely thank you for being with us today. And our heartfelt thanks to our guest of honor, Mr. Ajay Chaudhary, for his insightful address and for sharing valuable perspectives drawn from his vast experience in infrastructure finance, investment strategy, and value creation. I would also like to thank our keynote speaker, Mr. Mudit Shastriji, for his insightful address and for sharing valuable perspectives drawn from his rich experience as well as various anecdotes shared by you. We owe our deepest gratitude to our chief mentor, Sri Anil Shastriji, whose vision and constant encouragement continue to guide us in creating platforms that seamlessly integrate academic perspectives with industry practice. We are equally grateful to our director, Professor Praveen Gupta sir, for his dynamic leadership and unwavering support in fostering an ecosystem where meaningful academic discourse and contemporary industry insights converge. I would also like to sincerely thank Professor Rekha Gupta ma'am, Dean Academics, who has been a strong guiding pillar for us throughout this conference, wherever we find stuck. And I'm grateful to Dr. Swanjit Arora, conference convener, for her unwavering commitment in shaping every detail of this conference. I would also like to thank our Professor Pankaj Vashne sir, Area Chair Finance, for his constant support and encouragement. I would also like to place on record my sincere appreciation for all the committee members who have worked in the planning as well as the execution of this event. I also take this opportunity to acknowledge Colonel Ajay Sood sir, our Chief Administrative Officer, under whose able guidance our administrative and support staff have worked tirelessly to ensure the smooth execution of today's event. I would also like to appreciate the management grid and all the volunteers of all the committees who have worked tirelessly for the smooth execution of the inaugural session. I would also like to thank all our faculty members, faculty colleagues, and all the students sitting in the audience for their presence and active involvement. It's your support only because of which these kind of events are successful endeavors. With these words, I once again thank everyone who has contributed to success of this inaugural session, and may the sessions ahead lead to insightful deliberations, meaningful collaborations, and innovative pathways in the evolving financial landscape. Thank you, everyone.
Thank you, ma'am. Thank you to all our distinguished guests and to the audience for your participation and engagement. Your presence has greatly contributed to the success of today's event. I now request all the dignitaries on the dais to kindly pose for a group photograph. I request all the dignitaries to also proceed for high tea post that. I also request all the faculty members from the finance domain to please come forward. I request all the dignitaries to please proceed for high tea. We humbly request others to remain seated until the dignitaries leave the hall.
We request everyone to please stay silent.
ब्रेक हो रहा है तो बोला है कुछ नहीं होता झूठ नहीं बोलते यार आज हमने थोड़ा बहुत डिजास्टर तो करे हैं वैसे सीसीटी में हमने सुनाएगी शायद नहीं सुनाएगी ना वो तो हम बोल देंगे उसी वाले को I request everyone to please be seated.
10 minutes की ब्रेक है 12:30 से वापस चाहिए बोल
How do you know?
चाप बोलो
जाओ जाओ जाओ
हेलो। हेलो। 1 नंबर 2 नंबर वाइड का ऑन करो। म्यूट भी हटाओ पहले सारे। म्यूट हटा दे सारे आप। हेलो हेलो हेलो। अब ठीक है? अब तो ठीक आ गया। हेलो हेलो। ठीक है अब तो? आवाज सीआर से सुनो ना। सीआर को बढ़ाओ। अब तो ठीक है? हेलो हेलो हेलो। ठीक है? डन? ठीक है अब तो? ठीक है। ओके। हेलो हेलो। ये सामान वहीं जाएगा जहाँ से लाए। पहले तुम पहले अंदर की सेटिंग करो बच्चे। हाँ कौन सी? अरे यार
hello, hello. Hello, hello. नहीं
I request you all to please take your seats and put your phones on silent.
कॉल क्या बोल रहे हैं?
Please take your seats.
अभी बोला ना तुमने 2 मिनट रुक जाओ फिर बोलते हैं। I request everyone to please take their seats and keep their phones on silent. Let's maintain silence now. Good afternoon, everyone. On behalf of Lal Bahadur Shastri Institute of Management, Delhi, I, Astik Pasricha,
And I, Shreya Mazumdar,
PGTM first year students, are privileged to welcome you to today's panel discussion. The theme for this session, Driving Financial Transformation, the role of emerging fintech technologies, reflects the accelerating impact of technological innovation on the global financial ecosystem. As the boundaries between finance and technology continue to blur, emerging fintech solutions such as artificial intelligence, blockchain, digital lending, and data analytics are redefining how organizations operate, engage customers, and create value.
Adopting these cutting-edge technologies enables institutions to enhance financial inclusion, improve operational efficiency, and remain agile in responding to evolving market needs. Our distinguished panelists will share their insights on how fintech innovation is fostering resilience, transparency, and sustainable growth across the financial sector. The discussion promises to shed light on how the digital revolution can serve as a catalyst for long-term transformation and competitive advantage. We are privileged to have 4 distinguished panelists for this enriching session. The discussions will be expertly moderated by our esteemed moderator, Professor Manu Kohli, Faculty, LBSIM.
Our eminent panelists include Mr. Prashant Kaul, Vice President, Global Tech Strategy, Bank of America. Mr. Satish Monga, Senior Group Vice President, Motilal Oswal. Mr. Rahul Agarwal, Vice President, Northern Arc Capital. We kindly request Professor Manu Kohli, Faculty LBSIM, and our eminent panelists to please come up on stage and take their seats. We are honored to introduce Mr. Prashant Kaul, a seasoned strategist with over 19 years of experience in consulting, research, and financial leadership. Currently, he serves as the Vice President of Global Technology Strategy at Bank of America, where he drives strategic priorities within the Global CTO's office. An alumnus of Lal Bahadur Shastri Institute of Management, Mr. Prashant possesses deep expertise in financial analysis, modeling, and commercial due diligence. His extensive background includes over a decade at the Smart Cube, where he led financial research units and was part of teams specialized in building business plans and financial forecasts for startups, with a skill set that bridges risk assessment, market entry strategy, and procurement analysis. Mr. Prashant excels at connecting complex financial data with actionable business growth. May I request Ms. Anandita Srivastav, President, Management Grid, to kindly welcome Mr. Prashant Kaul with a planter.
We are privileged to introduce Mr. Satish Monga, a dynamic leader in financial services and business scaling with over 25 years of rich experience in the fintech and finance sector. As Senior Group Vice President at Motilal Oswal, he excels in leveraging emerging technologies to drive franchise growth, operational excellence, and innovative financial solutions for modern ecosystems. Mr. Monga's expertise spans digital transformation, business strategy, and technology integration across financial services. With a proven track record in scaling enterprises, Mr. Monga has held pivotal roles that demonstrate the ability to navigate complex financial landscapes and foster technological advancements. Mr. Monga has been instrumental in building high-performance teams and implementing strategies that enhance efficiency and market competitiveness. His forward-thinking approach positions him as key influencer in driving financial innovation and resilience. In addition to Mr. Monga's professional achievements, his extensive tenure in financial services underscores a deep commitment to harnessing emerging technologies for inclusive and sustainable growth. His strategic vision and practical insights make him an invaluable asset to today's panel, and we eagerly look forward to his perspectives. May I now request Mr. Manav Vij, Vice President Management Grid, to present a planter to Mr. Satish Monga.
We are grateful to have Mr. Rahul Agarwal, an accomplished product and strategy leader in finance and technology sector with us. With over 20 years of experience complemented by a strong software engineering foundation, he specializes in driving product innovation, digital transformation, and strategic growth in fintech ecosystems. Currently serving as the Vice President at Northern Arc Capital, he excels in building scalable solutions that bridge technology and financial services. An IIM Lucknow alumnus, Mr. Agarwal has held key positions across renowned organizations like S&P Global and Banyan Capital Advisors, showcasing expertise in product development, tech strategy, and operational excellence. Mr. Rahul's career highlights include leading cross-functional teams to deliver high-impact fintech products, guiding SMEs through private equity and debt advisory, while navigating complex financial landscapes. He has been instrumental in fostering technological advancements that enhance efficiency, customer engagement, and business scalability. In addition to his professional achievements, his deep domain knowledge in fintech integration underscores a commitment to leveraging emerging technologies for competitive advantage. His strategic vision and proven track record make him an invaluable asset for today's panel, and we eagerly look forward to his insights. May I now request Ms. Chahat Kapoor, Vice President, Management Grid, to kindly welcome Mr. Rahul Agarwal with a planter.
We are pleased to introduce Professor Manu Kohli, a seasoned academic and industry veteran, currently serving as an Associate Professor of Practice at the Lal Bahadur Shastri Institute of Management, Delhi. He brings a wealth of experience to the classroom. With a strong academic foundation from IIM Calcutta and a background in mechanical engineering, Professor Kohli has spent over 2 decades in the corporate world, specializing in corporate finance, consulting, and business development across diverse sectors and geographies. A significant portion of his career was dedicated to the energy sector, where he held key roles at British Petroleum, gaining deep insights into oil and gas, power, renewables, and energy transition. In recent years, he has embraced entrepreneurship, co-founding a company focused on providing logistic solutions using electric vehicles. We now hand over the proceedings of the session to our esteemed moderator, Professor Manu Kohli.
Hello, guys, can you hear me? Yeah, okay. Okay, first of all, thanks everyone to join this on the encouraging talk in terms of fintech. I think a lot of students want to understand what fintech is all about, and we've been lucky, not by design, but I think by randomness, that we have got people from across the verticals in terms of, there is Prashant who represents a bank, then there is Satish who represents Motilal Oswal, one of the largest broker in the country. Not only broker, but yes, they do a lot of other work as well, which Satish might throw better light on. And Rahul, who comes from an NBFC mix private equity kind of background. And all of these sectors have, over the last maybe 5 years or so, have seen a marked change when it comes to adoption of technology, bringing new concepts into the foray. And before we start the discussion, what I was thinking earlier, we thought that instead of having a presentation-based talk, which becomes sometimes too boring, let's have a interactive session where I will try and put to the best of my ability and knowledge some questions which I will pose to them, and they will respond based on their expertise. And what we will also want to do is, in between, if students want to have any question, any remark on that relevant question or a topic, I think let's keep that interactive if you guys are okay with it, because that's what we want. We don't want just to be this to be a lecture where we come and talk about something. We want this to be as interactive as possible, and let's make it fun for all of us sitting here and not make it drab. Yeah. Before we get into the discussion, let me kind of put my 2 cents into how I understand fintech and what I think fintech is doing for a consumer like me. I think what it is doing at the first level is it is moving away from an institution centric approach to technology centric approach, yeah, which means it is more democratized today. I don't have to have a lot of money to get into investment. I don't have to have a lot of technology knowledge to get into investment or buy or sell things. What I need is a simple telephone, apps available, and I can today invest, trade, buy stuff, sell stuff. And as one of our keynote speaker in the morning, Ms. Vibha was saying, you don't need a lot of time to even open an account today. It takes maybe 10 minutes. If you are online, most of us are, you have digital signatures, you can open an account in 10 minutes. Yeah? That's one big change which has happened. And the other change which I'm seeing is more consumer-led. So if we look at the Gen Z, Gen Alpha, the consumer mindset has changed a lot. So unlike us, which are old guys now, prehistoric days, who had to wait in line and fill a lot of papers to even start banking, today I can just pick up a phone and start my banking operations. People want instant connectivity. They don't have patience. I think this is a terminology or a generation for instant gratification. Yeah, they don't want to wait for 10 years to achieve something which we have achieved in maybe 10, 15 years. They want to get it done right now. They want transparency. Yes, so because of social media, you can now approach anybody, whether he's a CEO or a CXO, and fight with him. Fight in the sense, put your views forward, which was not accessible to people like us in the older generation. Yeah. So I'll kind of rest myself and not bore you with my thoughts on fintech, because I'm not an expert on fintech. And I will hand it over to the guys here who brings that wealth of knowledge. Let me start with Prashant, who comes from a bank, and ask him on how these new technologies, which at least to me sounds a lot of buzzword, AI, blockchain, cloud, APIs, how is it facing the banking sector per se, or how your bank has responded to this change in technology? Prashant.
Absolutely, and guys, can you hear me? Okay, great. So, before I start, a health warning that, whatever I'm going to say here are my own private, personal thought, and it nowhere represent what my organization sort of thinks. So, with that health warning out of the way, let's get straight on to, the question. So, the deal is that I work for the technology strategy team, and, when you think about bank, so bank today are like technology companies which happens to be in the business of financial services. Just to give you an example, world's largest banks like JP Morgan, Citibank, they're spending between $12 billion to $18 billion every year on technology. And that would be both on running the bank as well as making the all technology changes, your digitization, your servers, and various things that they need for different purposes. And with the advent of digitization, there's a need that if you don't invest, then you will not be able to compete and you would lose customers itself. So let's take all these three technologies one by one. And we are sitting in 2025, and if we are not talking about AI, then I think we are living under a rock. So we'll take the AI first. So AI is not new, but it is new in the sense that the Gen AI, what most people have seen, with the advent of OpenAI is launching ChatGPT, but we have had predictive models certain things from past many years, but they have come to a foray, and there's suddenly a lot of interest and growth in this sector as well. And some of the use cases and the investment thesis with respect to banking sector is that a large part of AI is being deployed for the technology side also, to be able to write code and to refactor some of the code that has been written in ancient languages to newer thing. There's a lot of game on the productivity side for the employees, so that's why a lot of organizations are giving a co-pilot kind of a thing so that people do not waste time on that. Agentic AI is something, where still the jury is out. So organizations are spending money, but AI doesn't come in cheap. And they are being cautious because the fact is that they don't want their models to be trained on their proprietary data. There's a compliance issue as well. So are they taking those measured things? But definitely AI is a fairly big thing. I'll quickly talk about blockchain you have said. So blockchain has been there for many years, but it has not delivered to its potential. But in the last year or so, we see a lot of examples as such. So the Stablecoin Act, which was passed by US, that has given a flip to a lot of these things. We have central bank digital currencies now, which runs on blockchain. There's a thing on payments, but the problem remains of the interoperability. Decentralized finance also is going to take a few years. There are certain consortiums that are being formed so that the different lines can work with each other. And lastly, cloud is something which is powering everything, but cloud also comes in quite expensive. So companies are not locking themselves with one cloud vendor. So they would have an AWS as well as an Azure in there, because if you are stuck with one cloud vendor, you die. And they are also having their own data centers. Some of the mainframes are also running in, because that really depends what you are trying to do that. So cloud definitely provides you a lot of flexibility to up your code, run that API layer, make it fairly functional and flexible. But there is a need for us to look at the cost that cloud comes in. So an example would be that it's like buying a annual gym membership, but if you don't go to gym for 2 months, then the money, the ROI is not there. So this is clearly the scene is. So definitely these technologies are here to stay. They are very mainstream, but the organizations are looking where to use them best so that the best ROI comes out of that. Thank you.
Thanks, Prashant. I will now go to Rahul and seek his views, because Prashant talked about from a technology standpoint, and he shared his views on the key technologies which are shaping the fintech industry per se, or financial services, banking services industry per se. Do you think is this the change which is happening in the sector? Is this technology-led or consumer-led? What is your views as an NBFC who deals in retail as well as MSME? What is your views on this? Yeah, thank you.
Okay. Am I audible? Yep. Okay. So, see, my views, I would not say as an NBFC. Again, the health warning which Prashant gave.
I think that's with all the finance guys. They have to be very, very careful, because they're managing somebody else's money, and the regulators are really very, very strong. So they have to give all these health warnings on, okay, this is not my view, or this is my view and not the personal view, and not the organization view.
Because see, all these orgs that we represent, these are listed companies, and there are authorized people who can speak on behalf of the org. So these are personal views based on our experience, skill sets. So what I feel is, when you say a transformation is technology-led or a customer-led, so we cannot say clearly what leads it, because these are intertwined things which happen. So like as Prashant mentioned about blockchain, right? So the technology has been present since 1991. It was only in 2009 when Satoshi brought out that paper on Bitcoin. And still we are 16 years away. And now people are experimenting with CBDC, with tokenization and all those things. So every transformation, it takes almost a decade or maybe more to unwind. And what happens in the process is that engineers, they try to figure out a working model which consumers will use. And the use case depends on the consumer needs. So unless those needs are strong enough, they are wide enough to be used and deployed, till that time the transformation doesn't happen. So that is very much required. So like Aadhaar came quite early in 2010, right? And then they had to build the Aadhaar payment link over it so that you can link the UPI with Aadhaar. And then finally UPI started taking off from 2016 onwards, when you had a model which was useful to consumers. Although consumers had that need of, how do you transact in small amounts? So a lot of people used to use candies for that when the change was not present. But the need was there, so need as well as technology, they both have to come to a level for the transformation to happen. So they both go hand in hand. That's my view.
Thanks, Rahul. I'll now have a question for Satish, who, as I mentioned, represents Motilal Oswal, but again, the views are personal. I wanted to check with you because Motilal Oswal is probably one of the largest financial services company out there, not only in broking, but a host of other businesses that they do. Broking is the one which made them. I think it made them visible. But private wealth is something which is very, very large with Motilal. And before we get into that question, maybe Satish can throw a bit of light on how retail is different from private wealth. And then maybe take a question on how is it that the new technology, especially with relate to fintech, is transforming the financial services per se. Because I think that's where the democratization has happened the fastest, and probably has put, I'm not saying Motilal Oswal, but a lot of other companies who are traditional companies, maybe some kind of doubt or fear that companies like Grow Today or Zerodha are, in terms of volumes, probably are bigger than Motilal Oswal. Yeah, I was just reading in the morning, market capitalization of, I think, Grow is bigger than combined market capitalization of MCX, Angel One, and probably one more other broker. Yeah, so it is, and it's what, a 7-8-year-old company. Yeah, and the technology, because of the reach, because earlier if you had to go and this was maybe the time when most of you were not even born, if I had to invest in a share or apply for an IPO, I had to fill in a paper form, give it to a sub-broker with all my documents and a cancelled check, and then he will submit it to somebody, and it'll take me at least 4 weeks to hear if I can get that IPO. Yeah. So from there, today you can just click on a button and apply for an IPO. Yeah. Over to you, Satish. Thank you.
Thanks, Manu. As you have rightly said, that retail banks are doing what technology can do for all of us now. So there is a uniformity of delivery of service. Then there are technology which takes care of the standardization of the service delivery. Now India is at a level where China used to be 10 years back in terms of the per capita. So the premiumization has taken over. Whenever we talk about consumption, we will not start using 2 soaps in a day since we are earning more. Instead, we will prefer spending on a shampoo or something else for ourselves. That is the premiumization. When we buy a car, we will not buy a smaller car, we will buy a mid-size car. When we go to buy a mid-size car, then the pocket allows we go to a sedan or a luxury car. So that is the premiumization. So answering your first question, what retail banks used to do, Motilal Oswal, is catering to that premiumization of the private wealth. Because most of the transactional requirements are already being taken care by the banks. When it comes to the niche requirement of managing somebody's portfolio, that is being taken care by the premiumization caterment, and that is the requirement of the premium requirement which is being addressed by Motilal. Now to answer your question, why the institutions are left behind, there are multiple reasons for that. One is that if we compare the old PSU banks, many of us would have experienced that their statements still do not carry the investments which we have done with their subsidiaries. I'm sure. Even the new age private sector banks miss that. All of you have experience that you are having bank accounts with one or two private banks, new age private banks. They will give you the statement of accounts, but if you have investments in equities or mutual funds, that is reflected in the app, but not in the statement. That is what the fragmented systems make. That is the legacy which is being there in their core systems, which make it very fragmented. So they are unable to scale up to that level. Then there is a culture of fear that what they have taken 10 years to build, they may lose in a while if they take that risk of scaling it up with the help of technology. Then there are competency gaps. There are no staff who could lead it from the front to scale it to another level using technology. So these are the reasons where, again, the adding to that layer is the regulatory complexity. Data privacy, data protection, adding to the layer of responsibility is making it more complex. Then there is another problem at the consumer end also. You said that now you find it easier for yourself to open an account. But if you look at the larger population, there are three vehicles we consider which will help us all. One is that smartphone usage. Without using more numbers, I would ask, how is the smartphone penetration in India? It's very good. How is the internet penetration in India? Very good. But if you ask, how is the financial literacy in India? Very poor. It is still, it's 28%. So unless these three things fire together, the new age technology dream cannot come true. So these are few of the disablers which are pulling us back.
Before we move on to the next set of questions on different aspects of fintech, I'd like to throw this open to students in terms of if they have any questions specifically addressing the topic that we've discussed till time. Yeah. Anyone, please feel free. I think I'd in fact encourage you to ask questions because it'll be very difficult. It's not always easy to get panelists which represent such a wide area of expertise in the financial services. So please feel free to ask questions. Anyone? Excuse me. Beta aage idhar. In the front, yeah. Just move ahead. Raise your hand again. You don't have a speaker? You don't have a mic here? Maybe you can speak a bit louder, yeah? You are young, you can. Yes.
So, sir, my question is, why is there such a gap? Why are there so few, or let's say not any new age company when it comes to private wealth, but there are a lot of companies on the retail side of things?
Should I answer it simply or complex way?
Sir, whichever way you feel is correct.
If there are two gatherings, one is free for all, another is paid, where will you go?
Sir, since I'm a student, I'll go to the free one.
So that is how I would use the word not paid, the exclusive. Because if it is exclusive, then there is a payment. If it is free, it is zerodha.
Okay. So, sir, basically, the private side of things, they are ready to pay, so that's why...
there is an advisory. There is a value add. At every buy or sell transaction, there is an advisory.
Right.
Which, unlike in case of zerodha, there is no advisory. So that is why it is free.
Okay, sir. Thank you.
Yeah, just to add on, yeah, sorry. So just to add on Sati's point, I think most of the newer age companies, whether they are Grow, Zerodha, or upstocks, they don't offer any advisory, and that's why if you look at their um, customer profile, but also look at the how customers are faring in that app, faring in the sense, if you look at their profitability over a period of time, you will find that because they don't have a lot, they don't have a lot of advisory services, most of them are not financially literate, only they have an access to an app, they can buy or sell stuff, so they tend to lose a lot of money other than people who are willing to pay for advisory. And that's where private wealth comes from, because a person who has money would want something different and would want, because the basic stuff he can also do. Yeah, if he has money, he has enough expertise and knowledge and intelligence to at least take those simpler calls. That's why he left it or he leaves it to experts like Motilal Oswal and a host of other private wealth companies to advise them. Yeah. Am I right on this?
A set of 60 people who are doing research on all the stocks which are traded on the market. So you may have your views, you may have your biases, but the logic comes with the due diligence of a stock, whether the timing is also right or not. That is why we advise to the client, the stock is good, but the timing is not the correct. Let's wait for some time.
Yeah, I'll just add one more point. So when you say why there is a surge in companies which provide broking as opposed to advisory, so that has also got to do with the tech that enables them. So currently what has happened is all these UPI rails and identity rails, they enable these companies to quickly reach out to the consumers, do their KYCs and help them open the accounts and also help them transact. But that has not happened on the advisory side so far. So with Gen AI, you might see again a surge of companies which are doing all those robo-advisories. So that is yet to come, and I guess in next 3 or 5 years, that will be, as much present as grows and upstocks are there. Okay, so first coming to your question on why NBFCs did well during COVID. So one of the reasons is that RBI allowed them to, not recognize those loans as bad loans during that period. So that was one of the reasons. And second was we were not so much leveraged in terms of, lending to MFIs or in terms of debt to equity ratios. So that could also be one of the reasons. But primary was RBI allowed them to, give some moratorium to those loans. And
I can take the AI question, yeah. So the fact is that, you are experimenting and it's good that, it's able to give you a good idea, but the fact is that whether it will be able to give you a consistent good performance over a period of time, because AI is learning and there are hallucinations. So while you have a small ticket size and you might be willing to wager your money to build a model, but if you want to do it at scale, there needs to be guardrails, there needs to be checks and balances, because if you are doing it with someone money, you can't just, trust on the AI model to do it and then you say, sorry, it wasn't me, it was AI. So, that's why. So use the tool, it's a blunt tool. It can, help you in that, but, you cannot use it for a surgical precision at this point in time. You never know. 10 years from now, we have general purpose AI to do that. So don't ask everything to the ChatGPT as well, is what my advice would be. Learn prompt engineering. So that's something which we are doing and you should also do. And also use, the hard skills will never go away. That is your domain skill. So today, the ChatGPT would be able to make a model, but if you know what is the discounted cash flow, what is the hurdle rate, all those things, then you are far better off than someone, who would give the same prompt, will not understand, how it calculated. So you could always challenge that, hey, it is not making sense to me. Why it is 6% and not 10%. So domain skills would remain in power, no matter how much things can be created in the thin air, is what my view would be.
Risk assessment, credit scoring, and fraud detection in financial services.
Hold this thought. I think when we go to the risk part of it, we'll go to it. Let's not finish on the.
No, so actually,
yeah, no. We will address your question when we go to the risk and regulatory part. Yeah. Thank you. Sorry. Now I think.
For the question in advance, we will prepare it while you.
Good. I think before, now you have set the stage in what is happening today in terms of technology. And all of you come from, if I may say so, traditional institutions. You come from a bank, you come from a conventional, used to be a brick and mortar broker, still is. And you come from an NBFC, which again, traditional, is not a app-based business. So how are you, each individually as an organization, trying to match up to the competition, which is born with that technology spoon, if I may use that terminology in its mouth, because the younger guys know technology like the back of their hand, yeah? And you are now competing with guys who have reached far bigger than you can ever build just on a brick and mortar model, yeah? Anyone can take to start with. Yeah.
So I can start, and all my experience, and I think, we have a great panel here. So there are certain India-specific use cases and insights which have been provided, but I can give you an international perspective because we do not do any retail banking in here, but the organization that I work in is world's second largest bank by assets. So you see, it is a challenge for us. So while we have to compete with all the neo banks like your Revoluts and your Monzo, so one, there is a significant investment on technology, and the idea is same. Obviously, these newer fintechs would come with little technical debt. Their technology stacks are new. They don't have traditional COBOL-based system. They are not fragmented as they had said. So the simple philosophy is that the core is something that you build and you maintain, whereas certain solutions which are available off the shelf, you buy and you bolt them on so that you are able to provide a seamless solutions to the customer. And one advantage that we as a large financial institution would be that, we have been in this business for hundreds of years, and we are with the people in their entire life's journey. So starting with a small saving account, when you sort of grow up, you think that you need a business loan, there's a business loan as well. So if you are more richer in the life, we can give you advisory service, wealth management, private banking services. If you want to start a company, there's an entire division that does that. So the relationship that we maintain and the trust that they would have and the regulatory insight and oversight that we have gives us a value which maybe some of the newer organizations will not be able to give. And lastly, the amount of capital that we have with us, and we can do things at scale, which is very difficult for a newer setup also to replicate. So there's a mutual, there's a trade-off that one needs to do. So we are still in the game, so do not write us off.
So I would compare the brick and mortar models as the historical cities, which are beautiful, but have narrow lanes. At the same time, there are fintechs who are smart cities having very flexi lanes. So wherever there could be a synergy, we are trying to fix it up on it and make that synergy work for you. For example, video KYC is one such thing. Generative AI is one such thing. Generative AI is nothing but where the chatbots are assisting you, serving you. Then there are next best product which is most suitable for you. So these recommendations, when you go to a bank, the person on the counter gives you that this is the next best thing you can do now. So that is nothing but a generative AI working. Then there is algorithmic broking, which we are doing. But as somebody was saying, that we are not using algorithmic broking for creating. We are doing it for executing only. It is basically the human minds which are deciding where to invest, but only for reducing the turnaround time. For the execution, we use the algorithms, which is quantum computing only. So these are the live cases where, yes, we are using off and on where it can be used smoothly with the brick and mortar models.
So a couple of things that happen with a regulated entity like an NBFC or a bank is that we are custodians of wealth of individuals. So there is a huge regulatory oversight, because of which we are not able to, let us say, innovate so fast, because that requires experimentation, a failure, and then recalibration. So in that cycle, we just cannot go because there is a lot at risk, and regulations also don't allow us that. So for that piece, fintechs are best suited for that innovation cycle. That is one. And yeah, there was one more point. I'll just come back to it when it comes.
Just picking on your thread in terms of regulation, isn't that applicable to the fintechs as well? If I am, and correct me if I am wrong, and I don't know enough in that space, I am in the new age companies as well, putting my money inside. Yeah, so there is a risk of that as well. There's another risk of, as I think we will take his question on the risk, which is now valid, is the risk of data privacy. Yeah, so isn't that applicable to the fintechs as well?
So yes, that is applicable to fintechs as well, but not to that extent. So just take example of, let's say, a fintech which is helping you do UPI transactions versus a bank which has your savings deposits, which has your fixed deposits and other stuff. So fintechs don't have those kind of products with them, or they're not allowed. Similarly, if you look at these brokers, so again, brokers help you just transact, but that asset goes into your demat, which is again a highly regulated entity. So in that way, there is some safety with these highly regulated entities, and that is why they're not able to experiment so fast. And a lot of, so that point came back. So a lot of these regulated entities, they have a boundary scanning roles wherein people look at the outside world, the inside world, and they look at what can be done next. So a lot of these boundary spanners, they are not able to reach to the top management who decide what needs to be done next. So that also impedes their ability to move fast with the technology and with the customer needs.
You're saying at times the size of the organization is a big slower. It does provide you wealth in terms of capital, but the size itself makes them, as I say, it is very difficult to kind of an elephant to dance. It becomes that more difficult for a large organization to move very swiftly.
Yeah, so just imagine that there's a bus which is running on the road and you want to change the tires. So it becomes very difficult.
No, very good example. Now we can maybe put your question, yeah.
Risk assessment and the credit information are analyzed for the creditors.
So, I briefly talked about the AI implementation and use cases. So, what banks, large banks are doing, they are adopting, AI, but in a very calibrated manner. So, the examples that you gave in, they are sort of, doing it fairly cautiously. So, like the credit appraisal. So, the deal is that, one, you need to understand how the model really works, so that there's no black box thing in there. So there are role like model risk management, which will sort of look at all these AI models to see what kind of answer that they are coming in, because it can lead into a problem. You would have seen those examples that in the US, they use the credit scoring model, and it was trained on a data which sort of historically favored the Caucasian whites. And the results that came in, they were more biased towards the Afro-American. So we don't want to lead into that kind of a problem. So it is very important that we have the human in the loop, be someone who is checking the output, and we are able to reproduce what is coming in there and understand rather than machine deciding doing that. Similarly, in the risk management itself, it can automate a lot of different things, but understanding what it is doing becomes far more important. So, you can't mindlessly put AI in everything without knowing the implication of it, but they are using to, cut the, the hurdle, the toil in doing a lot of things manually, but keeping the control in your hand.
So in the long run too, we can't see AI complete taking.
In the long run, we all are dead, as what Adam Smith said. So, the thing is that it is evolving as we are speaking. So, it's very difficult to pass a verdict that what will happen 2 years from now. So, we are in that same boat together, and things are evolving. Certain things which were impossible to dream a few years back, we can see it right now. So, I would still not wager, on that bit.
Thank you for.
Any more question on this?
So first of all, good afternoon to all the guests and professors. My name is Tushar Solanki from PGDM General Batch Section G1. I wanted to ask, I'm planning to build my career in finance, and I wanted to, I'm planning to study for CFA exam. So wanted to ask that if that course would be relevant in the modern future, like 5, 10 or 15 years from now, or there are some better courses like you mentioned, prompt engineering or agentic AI, that I should invest my time on.
Okay, yeah. So when you say build a career in finance, so in which domain in finance you want to build the career?
I'm still confused about that.
Okay, because see, CFA program is mostly about wealth management and investment management. So unless you feel you want to go in that direction, you should not go for CFA. So a lot of people I see from B schools, they go after CFA program, and after level 1 or level 2, they discover that it's not for them. So rather than discovering late, just decide now whether you want to do it for investment management or not. Else, it's not of much use. So see, what is happening in the industry is the people who were, let us say earlier, focusing only on technology, and they have not learned about the business side. So I don't think they will have a very long career. Similarly, people who are only on, let us say, business side and not learning about technology, same will happen with them also. So there's a convergence which is happening between tech and business. So that is why that is something which you should focus on. So prompt engineering, yes, you should learn. You should learn about various tools which are coming up, what are the limitations, and how you can use them best. So that has to go hand in hand. You cannot say I will do only about business knowledge and not about tech. Yeah. You have to do that.
Let's move on to the next section where I wanted to maybe start with you, Rahul, because you also do a lot of MSME lending, and I hope all of you guys know what an MSME is. Yes? Okay. And for all countries in the world, not only India, all countries in the world, MSME plays a very, very large role in their economy. In India also, I think 60–70% of our industry is run by MSME. We only get to look at the big bold names which are listed, but the people behind running the economy engine are MSME, and Rahul is one of Rahul's companies, one of the NBFCs which deals with a lot of MSME. So my question was, how does technology help you in some way or the other reach financial inclusion? Yeah? Both from a MSME perspective, maybe as because you do a lot of retail lending as well. How does technology help you get there?
Okay. So one of the things which DPIs, which is Aadhaar, UPI, and DigiLocker did was they helped us, gather a lot of identity data, a lot of banking data from these users. So that is something which helps us reach out to people who were not reachable earlier. So these are the guys who were unbanked or underserved. So that the tech has helped. And now further what is helping us is the account aggregator framework. So that lets us look at their bank accounts, do the cash flow financing, all that stuff. And also a lot of these merchants who are part of MSME segment, earlier they were dealing mostly in cash. So assessing their income, their revenue was quite difficult. The moment these people have migrated to UPI, so it has become very difficult to assess how much revenue or income they have. And basis that we can do a lot of underwriting. So, and why we say that is inclusive is because in emerging market like us, there is a large segment of these people who deal in cash. And they deal in cash not only because of, they don't like to get into accounting stuff. It is also because it is affordable, highly affordable to deal in cash. So government has made it very easy at a very low cost, rather zero cost. So that is why these things are coming under the inclusion framework. And it, as you said, it just helps us grow the economy. Because as more and more people come into formal credit, so their access to credit is at a low cost, it is faster, and yeah, that, what you say, that improves the speed at which this flywheel is going.
Is there a lot of government push also there in terms of policy, in terms of regulation to kind of help you?
Yeah, so not government push per se, but rather government is quite helpful. So first of all, they brought about these DPIs at a very low cost, rather zero cost, right? And second, DPIs, the digital public infrastructure. So Aadhaar, UPI, DigiLocker account aggregator, so at a very low cost. Second is they also provide incentives if you lose money when you are lending to this segment. So they provide you some kind of subventions or let us say guarantees so that you can lend to these entities. So that happens.
Move out to Satish, and because again your entity has access to people's money in the sense that they park funds with you, they play on margin, or they are trying to create wealth for their future. How does regulator manage that innovation and consumer protection? Because here there's a lot of data flowing around, and now I think last probably a year or so, all of us who trade, some of the students might also trade, the moment you open your demat account, it says 95% of the people lose money on FNO trading. Yeah. So how does that technology connection and technology innovation help you as a business, but also help consumer protect his wealth?
If we talk about specific blockchain here, think of a room which is filled with bill of lading and letter of credits, paper turtles moving in the back office of a bank. And suddenly they become connected, and in the morning, all the turtles start to sprint. So that is what has happened after technology has taken place, because in this, you would have known that there are around 18 banks which have come together to set this blockchain company, where the LC is now being done in less than 4 hours, which earlier used to take 4 or 5 days. And then fraud is also not possible, not easy in this, because these are encrypted. And the cost is also less. So similarly, in case of wealth management, faster, risk compliant, at the same time uniformly. So these are the 3 things which has been done with the technology now.
Moving on to Prashant, and I think you did mention in your previous answer in terms of there is a space for collaboration and as well as competition. But in the future, especially for banks like you, legacy banks, is the next decade be more towards consolidation and competition, or collaboration and competition?
Hi. So that's a wonderful question, and I hope I had a crystal ball within which I could gaze and give you that answer. But there's definitely two models in there. So one is, and I think I'm more biased towards the partnership model. So banks, the large banks have realized that while they want to do everything, they want to have the velocity and the UX of what a fintech would do, but it is not possible for them to do. So what I believe the model would be that the banks will keep the key functions, and as was said by Rahul, there's a lot of regulatory pressure, there's a lot of things which only a bank can do. So bank will, and they are collaborating with some of the fintechs to sort of provide and help them on the UX side, whereas the onboarding, the asset liability management is something which they are done. So I'll take one international example. So Goldman Sachs, we know, is an investment bank. And suddenly 3 years back, they had a feeling that they need to go into a consumer operation side. And they collaborated with Apple to launch a credit card, which is known as an Apple card. So this was a case wherein all the onboarding and issuance of the card was done by Goldman Sachs because it's a regulated banking entity. But the Apple Pay and all the UX and everything was done by Apple. So this is some of the large mainstream examples which I can think of. That's another thing that soon they realize that retail banking is not their cup of tea and they intend to offload it sooner. But we will see more such examples wherein bank would ensure that they are not giving their IP, they are maintaining their core competency, but bringing in there. And on the other side, we will see a few examples of some entities which started as a fintech, but somehow, able to convince regulators to give them a banking license and become a universal bank. But those will be far and fewer in between because, you can't, give these licenses to one and everyone. We have seen example of Paytm and something of that sort. So I think there's a more collaboration that you would see than alongside with a friendly competition because, that will keep banks on the toes that they need to compete with the newer age banks as well. So that's what I feel.
Your sector as well, Satish, in terms of how do you see the future evolving in terms of competition versus collaboration? So you are competing with Grow, for an example. How do you see that future evolving?
I would agree with Prashant because it is not a competition in any case. As I said, it is free versus paid. And it's a collaboration way ahead. Wherever there are pockets are allowing, we are doing the collaboration. Maintaining our IP with us, which is our USP, which will remain with us. But wherever there is a feasibility of collaboration, yes, that is a way forward. By the way, if I may ask, how many of you are users of Grow in this room? Lot many.
Competition is hotting up, Satish. You have to.
No, because I was told that it is mostly being catering to the rural India. But that is not a fact now. I can see that.
But I can also assure you, the amount of ticket size which these Grow users would have will be equivalent to maybe half of your large wealth management account, right? So it's also a fact about value versus volume game that you also need to see. So, but yeah, Grow is able to catch them young, and soon when they will hit their working life and they will have lots of money, they might come to you for wealth management advice as well, right?
No, I think one thing we have to agree on, maybe agree to disagree, at least sitting from a academia, I can point that out, is at least these institutions or these companies, new age tech companies, have democratized the process. At least it is helping in create, maybe sometimes wrongly, but at least create some financial literacy. Yeah, at least people are now aware that there is tool available. There is an avenue available for me to invest. There's an avenue available for me to actually transact, which were not available to maybe our generation or the generation previously. Yeah, so at least that reach has become much more better than it was previously. Yeah, Rahul, your views on? Do you have any views on competition versus collaboration?
So I think it will be mostly collaboration going forward because there's a lot of innovation which fintechs do. So like India has around 10,000 odd fintechs as on date. Yes. And RBI is, and also SEBI, they are encouraging fintechs to innovate more. So they want fintechs to stay, they want them to innovate, and I think everybody benefits out of it. So like as a regulated entity, you might not have a lot of bandwidth to see how you can capture more social data from a user. But these fintechs, they would put in effort, they will do experiments, and they will fetch that data and give it to you for a fee. So that is the kind of innovation these guys are doing.
Okay. Sorry, Sachin. Mr. Sachin? No, sorry. Okay. So the other thought process that I was wondering about, or I thought I will check or discuss it with you guys, is in terms of all of you. How do you ensure that the data safety is paramount? One, the regulator requires it definitely, but your brand takes a hit if it is not properly treated, if it goes out. Yeah. So apart from just being pushed by the regulator, what is your view, or what is your organizations, if you may show some light on how your organizations look at data privacy, cyber security, and a host of similar risks when it comes to consumers? Anyone can take, and then we can move.
So see, so there are two parts to it. One is data privacy. So what happens is, whenever we develop any of the products or we fetch data from the users, we try to ensure that it is just the data that we need for doing the task. We don't ask for more data. Because we know that because of cyber events, if the data gets leaked and somebody misuses it, then an entire blame comes on the org which is collecting the data. So that is one piece. We put it from the design stage itself. We question every data set that is being collected, why it is collected, what use you will put it to, for how long do you want to retain the data, how are you going to, if it is required to be encrypted, how are you going to encrypt this? Because encryption also has its own risk. Every passing day, these encryption algorithms are also getting updated because people are able to crack the algorithms. So that is also a challenge. Then how you anonymize the data and all that stuff we do. Now coming to cyber security, I think that is a significant, a significant challenge that everybody faces as on date. Because every regulated entity, a bank or an NBFC, would be witnessing close to 5 or 10 or maybe more cyber events daily. So there are attacks which keep on happening, and there are systems which are put in place. So just like you have circuit breakers in your house, similarly there are circuit breakers which prevent any malicious intent. So that is rather, so in the CXOs now you have CISO, so Chief of Information Security Officer. And they have a major role in deciding what gets built, how it gets built, how do you integrate with external vendors, right? So yeah, that is a significant piece nowadays.
On a very similar note, I think, we will rather not do a thing than, do it in a less secure manner. So, we follow a principle of secure by design, and that sort of, permeates in every processes that we do. The data storage, who needs to know, and, building the training and culture to sort of ensure that this is done. Because we have seen in the past that, our peers have gotten, billions of dollars in, penalties due to data breaches. You know the example of banks like Wells Fargo and all. So in fact, some of the investment bankers were using their own mobile phone to talk to each other. So I think in certain cases it will go to the level of being a paranoid. Some of you would understand, the kind of environment that we operate in. There's a separate phone that a lot of these banks have, wherein you can only talk and interact in there. Your mobile phones, your laptops are air-gapped, and that is for the reason because it's the data which is the currency, and the organization are spending lots of money to off this denial of services attack and ensuring, and also human, they should not do that. So there are regular trainings that are happening. So very important, please have that risk mentality in your mind, and that needs to be inculcated in everyone's, because it's everyone's job, is what I feel.
And I'm sure everybody who's having an account or two in Delhi or in India nowadays would be receiving a message also every day basis that do not share OTPs. So there is a lot of awareness activity which is going on, and before that, confidentiality was always there. DPDP Act has come in last 2 years, but confidentiality was by design there always. As a process, there was not to be shared. Something is to be maintained confidentiality, whether at an individual level or at an entity level. So that was already there by design.
I think as Prashant, as you mentioned, and maybe I just want to put that in the room, I used to work for an energy company, and at one point of time I was also a trader in commodities. And as you mentioned, we used to have a separate phone. I can't carry my mobile phone or my laptop inside the trading desk because there is an information leakage possibility. There is a proprietary model that I run on or trade on, which I cannot or do not want to share with anybody. So apart from just risk of attack, but there is also a risk of leakage, yes? So both of which have to be very, very carefully managed by large institutions who have reputation at stake, people who have built those organizations over the last hundreds of years. You can't just throw away your reputation on a small data leakage. Yeah? So it becomes very, very important for legacy institutions to be even more careful when, as Rahul was mentioning, even in our organization, we used to get trainings every month or so at a senior level also, that there is so much malicious attacks which keep happening, sometimes hundreds of those attacks every day, that people have to be careful about. And I think risk is something which somehow in our Indian mindset does not come so easily. We think कि ऊपर भगवान है सब बचा लेगा, and that comes to us very, very naturally, whether you see it in our behavior on road or wherever you see, ठीक है मुझे क्या होगा भगवान बचा ही लेगा. Yeah? Whereas if you look at large, especially large MNCs, risk is a very, very important function. When most of these guys have a chief risk officer, yeah, so that becomes very important. So guys, any questions before I kind of do my final question on these guys? Yeah. Any questions that you want to raise? But please don't ask about career advices. Yeah. Yeah, you can. I think Prashant has volunteered that he will answer all career-related questions now. Yes, please.
My name is Devansh and I'm from the PGDM General Batch. So my question to all of you is that when we talk about fintech, let's say we ask someone to define fintech, let's not in the first line, but in the second line they'll say innovation. One word will come, it is related to innovation. But sir, if we see in the history of fintech, the biggest innovation, which is in my opinion UPI, came from a government entity which was backed by traditional banks and was supported by RBI. So my question is that why are these fintech companies not coming up with something as big as UPI? So why is a government entity taking the lead?
Surely, very quick and short answer. So basically, UPI is basically an infrastructure. And, the government never wanted to sort of do it, but it is just like building your highways and your roads so that, the trucks can run on it and they can, do work on that. So the digital infrastructure was created by government, and they sort of ensured that accounts are talking to each other. So it was a great, leveler that, a lot of these financial institutions came on that same page and could talk and interact with each other. So, and I think that's the greatness and beauty and the innovation which the government-led entity has done it. And that's the model which has been now replicated across other locations also, because we were laggard in so many things for so many years. Those innovations happened in the US and then we will ape it. But this is something which can we really be proud of. And everyone is looking at us to have this infrastructure so that, there is a interoperability between all of these different things. So that's the view that I have.
I agree. I think I come from a similar regulatory business, not in banking or finance, but most governments in the world are will be proactive in building infrastructure, because infrastructure, whether it is digital or non-digital, is a very long gestation business. Yeah, private companies tend to avoid, not always, but tend to avoid things which give them money after a 20-year period. Yeah, so that's why government plays an important role in building any kind of infrastructure. Yeah. That's the short answer for it. Yeah. So one kind of final question to all of you is, and again, maybe I put a spot on you in terms of crystal grazing, is what is one technology, according to each of you, which will, or which you think is a game changer? All of you come from like a mix of tech business background. What do you think is one big technology out there which could be a game changer?
I think to make it a game changer, generative AI is the one big thing which could be an immediate game changer. It has already started showing its way, whether it is a bank, whether it is any company under financial services. Generative AI is one big game changer which has already started, made its presence felt now.
So I think from a finance perspective or markets perspective, it is tokenization of assets, which might be a huge enabler for liquidation of assets, for discovering the right prices, for disintermediation in these asset transactions. So that is the biggest one, I think, which is going to happen quicker than anything else.
But isn't the kind of recent experience on NFTs is a bit kind of let down?
Yeah, so that may be. So these things keep on happening. So similarly, in case of KYC also in India, if you see lots of mule accounts get opened, right? And then they keep on cleaning those up. So these things will keep on happening, but that shouldn't stop the progress towards it. So in fact, tokenization rests on blockchain. And RBI is already experimenting with CBDCs. And there are around 7 million plus users in India who are using CBDCs actively. So either pushed by RBI or by anyone else. And there are 19 odd banks which have their CBDC apps also, which including HDFC, ICICI, every one of those.
Okay, if I have to, bet on so many different technologies, it looks like I'm in Las Vegas, whether should I play blackjack or roulette. So I think I'll place my bets on agentic AI, and simply due to the fact that, these technologies cannot, agentic AI has a view of simplifying a lot of these workflows, which has been traditional. So, your operational process. So a lot of this process has been like bolted on, but nobody has reimagined it because, as you have said, it was like a truck and you wanted to, change a tire in there. But agentic AI would be able to, cut the toil out of it and make these processes fairly simple and easy. And that will release a lot of bandwidth as well as money to do a lot of different things. So I think you got 3 different answers. So it's like a good bouquet of technologies which you can, pick from each one's vantage point.
No, thanks a lot, guys. I think one or two final questions, if you guys have any.
Sir, my question is particularly to Satish sir. Sir, if we see the number of DMATs account opening post-COVID era, or the number of SIPs that has been particularly on the top, and the numbers have been so increased, which have been fueling up the run of the Nifty 50. But particularly my question is, like if these things are happening, or particularly Sir Motilal Oswal or other brokerage firms as well are giving opportunities to the retail investors as well to invest in other countries like US stocks. They have open opportunities to invest in US. So, but what are the precautions or the safety measures? Even if we see regulators, the regulators have been too stringent on the FNO policies or in the derivative markets. So my question is, what all safety measures are provided being to the retail investors being while investing in with different brokerage firms, sir?
So here also there are 2 categories. One is free. So if we talk about that, it is a freewheeling. You opt for it, make losses, or get some profits, it's up to you. But when it is a guided tour, the chances of your main objective of coming to the market are more. By getting the access now to the US markets, for that matter, any other market across the world, let me tell you that also, that we are providing that platform where you can access markets of any nation in India, because investments, we also recommend that beyond the border, there's an opportunity. That makes a lot of sense for diversification of your portfolio. Up to, say, 10% of your portfolio should be outside India. So that makes a lot of sense, because we also see that the stocks are there which are running on the same fundamentals of having the PE and the EPS. Those fundamentals are true for the all other entities outside India also. So there are opportunities. If we compare it with India, the Nifty is already at a high. So at this high, where do we recommend? We recommend into the alternates or outside India. Now, when we give advice, all those things are incorporated into that, because that is after the due diligence. Answering your question again, that when we give enablement for future and options, we do take into care the financials of an individual or a company before giving an access. It is not a click of a button that you will get an option to trade in options and futures. No. There is a level check on that also, whether you get an access to that.
Okay. Thank you. One final question. You have had a chance, I think. Somebody else. No? Okay, you can ask then.
Central bank itself, so we can see it being more reliable. But what is the future of it? Is it necessary in a sense that? But we can use internet banking itself. It is a process, but why is it coming up first of all? Because the liability change is obvious, the change in process is obvious, but why is that happening?
I can give a quick one and then I'll ask you to do that. So basically, it's again, on the blockchain format, CBDC. So you could argue that, you already have UPI, why do we need that? But, it has got different advantages. One is the issuance cost for the bank sort of reduces. It's a digital currency, that's one. And it could be linked with the smart contracts or something. So let's say a bank or, a government issues a subsidy for a certain things, and it can be directly linked to an event that if this thing happened, then this amount of money goes into for this thing. So, it can be fairly targeted in that sense. And, you only, and it's very cost effective as well, because, the blockchain payment, you could trace all the money where it is going in. So it's, money laundering, all these other things. So it has got those advantages, and, that would be a great use case for, blockchain. But you're right, that's not the only thing in the game. We have heard Donald Trump trashing CBDC and, sort of rolling back the entire thing over there. So there would be political implications to it. But it's a good thing to have, to utilize the technology that we have to sort of target where the money is. Privacy is another angle. Somebody is saying that, government will know that how much money I have. They already know how much money do you have in that case, so don't you have to worry about that part.
Yeah, so in addition to that, there is one more use case. So when we lend money, so we usually lend, let us say if we give a personal loan, so we're not lending for a purpose, but there could be purposes linked to loans. So it could be a housing loan, it could be for medical purpose or for education. So in that case, CBDC is quite helpful so that we can track the end use, rather we can ensure the end use. So if I am lending for education purpose, then that CBDC can be only paid to an educational institute and not anywhere else. So that is the kind of use cases which we are seeing right now.
Very, very good perspective, Rahul. I think that I didn't think about it, but it's a very good thing of kind of tracking the whole process or the flow of money, actually intended purpose versus the money it was dispersed for. Guys, please put a big round of applause for all our guests. I think it was very well. Good. Thanks, Rahul. Thanks, Satish. Thanks, Prashant, for taking time out and sharing your views with the younger generation. Thanks a lot. Thank you.
A big thank you to Dr. Manu Kohli and all the experts for the insightful discussion. The perspectives shared have surely deepened our understanding of how technological innovation is reshaping the financial landscape. This means for us students, traditional finance knowledge is no longer enough. Complementing it with tech collaboration is very essential.
May I now request Dr. Smita Dayal, Faculty LBSIM, to honor Mr. Prashant Kaul with a memento as a token of her gratitude.
May I now invite Dr. Rupak Thapa, Faculty LBSIM, to present a memento to our esteemed panelist, Mr. Satish Monga, as a token of our gratitude.
May I now request Dr. Jaya Mamta Prasad, Faculty LBSIM, to felicitate Mr. Rahul Agarwal with a memento as a token of her gratitude.
I now request all the panelists and Dr. Manu Kohli to come forward for a group photograph. Thank you so much. We now request the dignitaries to move to the L&D room for lunch, and the audience is required to kindly remain seated until the dignitaries leave the auditorium.